All right, cool. Yo, what up for y'all watching this on the YouTube replay? I hope y'all are having a good Friday. And I'm going to start the stream out doing a quick portfolio update. Then we'll get into some of the stocks you guys want me to look at in the chat here. But here is our Weevil portfolio. We're up 16% all time in here. And these are all the stocks that I own in here. This is kind of my risk on portfolio where I buy a lot of the risk on stocks. Surprisingly, Reddit has been one of my best performers. That's the one I'm up the most dollars on right now. But yeah, Reddit's at an all-time high today, so I can't believe it, dude. Reddit just doesn't stop going up. It's crazy. Yeah, then we got AMD, Futu, Robinhood, Dave, Disney, SoFi. I got a lot of names in here, obviously some losers as well. So there's our Webull account. We also have our Robinhood account, and look at that. We're at a new intraday low right now. We're down 0.5%, so not great. But here are all the stocks that we own in here. These are all S&P 500 companies, so you probably heard of a lot of these stocks before, like a Google, Meta, McDonald's. And yo, what up, Mo? Yeah, happy Friday. Hope you're having a good Friday. And here's my total percent change on every stock. So luckily, we are up on every stock in here. We also have a Roth IRA. I did do some buying in the Roth IRA today. I actually bought 2 shares of RGLD. Royal Gold. So this is my first time getting exposure to gold. So this is a pretty interesting company. If you guys want me to look into them, I will for gold exposure. Yeah, that's our Roth IRA. And then finally, for our last portfolio, we have our Moomoo account. This is known as my buy and hold portfolio, as you can kind of see in the top left here. So once I buy a stock in here, I try not to ever sell it. I try to keep it on for the long run. And luckily, our portfolio has been doing really good recently. If we go to our year-to-date performance, yeah, year-to-date we're up 44%. So we've been pretty lucky, and the market's just done really good. One thing I found is in a bull market, even the bulls don't expect how much the valuations can go up. So that's what I love about the buy and hold strategy. But yeah, let's look at some stocks here. I saw one for AMD and RGLD. Let me go over RGLD since I just covered them and I own them. Check this out. So if we go to Robinhood right here, in our Roth IRA, I decided to pick up 2 shares of Royal Gold. This is actually a royalty stock that has a lot of exposure to gold. So check this out. The PE is a 25. So 25 times price of net income. But look at these royalty streams, these royalty interests that they get. This is the best part. I mean, it's up crazy year over year, up 50% year over year. So the royalty stream business is going like crazy. And look at how diversified they are geographically. Canada's 34. Then US is 16, and then all these other countries. But yeah, then the stream interest, this business is also doing really good. But look at these margins that they have. Obviously, royalties are a high margin business, so their net margin, their after-tax net margin is a 63%. That's a higher margin than Nvidia by far. And revenue's up 20, but net income's up 62. So again, that means they're growing their net margin. So yeah, here's a company making over 100 million of net income a quarter, growing like crazy, that has no debt whatsoever. Look at this absolute fortress of a balance sheet. So Royal Gold has no debt, $250 million of cash, plus some other assets of like gold holdings, and then they have a dividend. So it's like exposure to gold with a yield, 1% yield. So for those reasons, that's why I bought RGLT. So yeah. Let's see, Snowflake. My account went from 2,000 in April to 17K today. Yo, Adita, that's incredible. I'm so happy for you. That's awesome. That's awesome. So let's see here. Someone said, oh, Nebius AI. Let's look at Nebius as well. And then we could look at Snowflake. What is Lanthas Holding? Let me know what Lanthas Holding is. I don't think I've heard of that stock before. If you give me the ticker symbol, though, I'll check it out for you. And Breezy said, what app is this? Yeah, hey, it's actually a brokerage where you buy stocks and stuff. It's in the link tree in my bio, the very first link there. But let me go over Nebius real quick. So if we go to the Nvidia portfolio right here, because, Nvidia is so big that they own some stocks on the stock market. They have to make it public. And one of the stocks Nvidia owns is actually Nebius, NBIS. And again, just because Nvidia owns a stock doesn't mean that you should already own them. You always want to go do your own research on them. And when we go do our own research on Nebius, we start to find some very impressive stuff, like how incredibly growthy they are. I mean, look at their revenue. It went from 14 million the same time last year to 105 million this quarter, up 600%. I mean, that's the kind of growth you want to see. That's one I can trust. So I can see why people really like Nebius and why they've kind of been doing so good. Oh, I should have shown what they reported versus what the analysts expected. Basically, they had a really good quarter from what analysts expected. Hey, what up, Crispy? Yo, Zayat said you're so. That's not good. Ravi, what up, dude? He said TMDX. That's TransMedics, I believe, right? So this one is like a liver and heart repair company. And check this out. They've been pretty growthy recently. Like, look at this liver repair. That's 75% of the revenue. Look how growthy it is. Hey, what up? What up, Todd? Hope you're having a good Friday, dude. Look at the revenue. It's up 50% year over year, literally to a new record. So this liver revenue just hits a new record every quarter. Incredible. Highest revenue ever for the full year 2024. And they have this heart revenue, which also is at a new record. So both segments are growing like crazy. Are they profitable? They are profitable. Look at that. They're making a lot of net income. They just had the most profitable quarter ever, 35 million in net income. So with the 22% net margin, geez, the free cash flow is really good too. So actually, I can see why investors like this stock. Also, look at how they've kind of deleveraged their balance sheet. The liabilities used to be 75% of the assets. Now it's only 64% while growing the assets. I mean, everything's headed in the right direction over there. I do know that they did have some like shenanigans of a lawsuit, some accounting fraud stuff, but that was a while back. Yeah. Hey, thanks, Josh. I appreciate you. What happened? Yeah, Dr. Eagles, I'm on a brokerage right here. If you want to get this little software I'm on where you buy stocks, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get like 5 free stocks. So Francisco said United Healthcare. Yeah, so check this out. Let's do it. So United Healthcare is up 13% on the day after Warren Buffett disclosed he bought a bunch of the stock and some like warrants for the stock. So Warren Buffett bought warrants and some shares, or Berkshire Hathaway. But yeah, that's why the stock is up today, just because of the ownership from Warren Buffett. Which if Buffett's going to buy something, he must have done his due diligence, so he must have saw some value in here or something. Because look at this PE. The PE's a 13. Again, if this company gets accused of fraud, they'll get kicked out of Medicare and Medicaid for 5 years. And that's why the multiple has collapsed, because it has to somewhat price that in to some degree. And but basically this PE as well is pricing in like the net income could fall another 20 to 30%, and the valuation would still be decent. So yeah, they're making net income every quarter. They're huge insurance business, and you get a nice yield, a 2.8% dividend yield on them. So yeah, I don't know if I'd buy them after this 13% rally up 14%, but congrats if you own them before today. That's a nice little relief rally. I know that one's been struggling. Oh yeah, we got to get to Snowflake. Yes sir, Crispy, we focus on fundamentals. I need a Bob Ross quote. Just like, wow, I've watched so much Bob Ross and I can't think of any right now. Just like, happy little trees. Hey, Zach said SoFi. Yeah, let's go SoFi stock after this as well. So here's Snowflake. This is kind of like a Palantir competitor, another data analytics company. But there's some good news and bad news. And here's the bad news, unfortunately, good news first. They're super growthy. The revenue hits a new record every quarter. It's nearly $1 billion of revenue this quarter, 996. It's a new record. The annual revenue trend looks incredible. But here's the one bad news and why I think Snowflake's been struggling and it's really below its IPO price. It's because of these huge net income losses, and the trend isn't really getting too better either. The net income is down 35% from the previous year. So they're losing 300 to 400 million of net income a quarter. Not great. We would like to see those losses start to narrow, and they haven't yet. And I think that's why investors are a bit disappointed. And that's made them leverage up like crazy. Like, look at this. The liabilities used to be like 30, 40% of the assets. Now it's 70, a new record in the most recent quarter. With these huge net income losses, the money's got to come from somewhere. The 300 million or 440 million they lost this quarter doesn't just like vanish. So it's tough. Oh yeah, SoFi Technologies. I love this one, dude. And one of my favorite fintechs. And here I'll show you. I do own them, by the way. I regret every share I've ever sold, but yeah, we got 24 shares of SoFi left. We're up nearly 300% on them. We bought SoFi way back here is when we bought SoFi. But let me show you what I love about this company and why they deserve to be doing this good. Why like $22 a share makes sense for SoFi. Check this out. So one huge growth driver for SoFi has been their financial services business. And check this out. It literally just hits a new record every quarter. It's up 105%. Like it's doubled in just a year. I mean, these year-over-year growth rates in the middle are incredible. And that's why the PE on SoFi deserves to be high because it's so growthy. More than the average company. And also their lending business, their main bread and butter is up 30% year over year. So both main segments are growing like crazy. So the overall revenue combined was up 42%. And revenue's up 42. And on that revenue, they made $100 million of net income. Pretty nice. So people are really starting to take SoFi serious. They're actually making net income every quarter. They're super growthy. They're profitable. So yeah, already holding some, debating on holding versus expanding. Yeah, for right now, Zach, I'm just holding on to my SoFi shares. I would like to buy more, but it's not a great risk to reward at this price. BlackBerry started a new cybersecurity business. Is it good? Well, I don't know. It might be, but I've seen taking profits, especially I've gotten Hood too. Yeah, Hood and SoFi have been ridiculous performers. I'm up like here's Robinhood as well. Yeah, we're up 711% on Robinhood. Another stock I regret every share I've ever sold, man. I bought Robinhood like literally right after its IPO. Yeah, they're my little buy orders. Anyway, all right, let's see. LNTH. LNTH. Yeah, then we can look at VKTX and Rivian. Rivian's a company owned by Amazon. So yeah, Lanthas, this one's been struggling. Check this out. They had a little gap down on earnings. Let's go see what the earnings were and see if we can figure out why they gapped down. So yeah, look at this. The analysts were expecting 387 and they reported 378. So they missed on revenue. They did beat on net income, but they missed on EBIT. Oh, and look at that. Next quarter, it's supposed to like tank down. Did they like sell an asset or something? No, I don't know why. But anyway, this might be why investors are a little disappointed. Like they kind of lost the growth. Revenue's down 4. They did make net income this quarter, but it did technically fall by 15%. Free cash flow was good though. But I think it was just a little bit of a disappointing quarter. They missed on sales. They sell Pylarify, and yeah, look, their main business, whatever this is, I think it's like a prescription, 66% of the revenue, it actually fell 8% year over year. So maybe investors wanted to see the growth come back. But and they're interesting. So Rivian, yeah, let's do Rivian. What up, random? Yeah, we can look at Intel. What's up, guys? Yeah, happy Friday, by the way. Hope you're having a good day. So here's Rivian Automotive. Yeah, this one's another just money burning company. I think this is why they've kind of been flat since its IPO as well. Quarterly vehicles delivered 10.6 thousand. But anyway, the worst part is basically this right here. They lost 1.1 billion of net income just this quarter. I mean, that's not great. Like, I think the whole company is worth like 12. Or yeah, a $15 billion company. The whole company's worth 15 billion. You lost 1.1 billion just this quarter. Not great. Not even including any of the other companies. So you lost 1/15 of the entire company, leveraged up a bit. But the good news here, it's kind of backed by Amazon and Porsche. Check that out. Amazon's the largest shareholder, 13% of the shares, 12% goes to Porsche. So anyway, Rivian is one to be careful with just because of the money losses or the net income losses down there. It's tough. Let's look at Intel, then we can look at Visa. Yeah, I want to get to all the stocks here. I do apologize. Intel. INTEL. So yeah, here's Intel. Dang, they lost a lot of its gains. I think they were up like 13% pre-market, or they're still up 5%. Hey, anyway, pretty decent day. I wonder if there's like any specific news. Do you know, was it like earnings? I don't know. Intel may receive U.S. government equity stake. Oh yeah, that was the news. Like the government might take a stake into them. I don't really know, but for right now, this is a tough business to own. I mean, if we actually zoom out on Intel, Intel is literally the same price that it was back in 1998. So imagine that. You bought Intel in 1998. It's the exact same price today. So it's tough, but here's kind of why. I mean, this company used to print money. If we zoom out, they used to have so many like deals with Apple. Look at this. In 2021, they were making 5 to 8 billion of net income a quarter. Now they just lose money. I mean, they lost 17 billion, 3 billion this quarter, 1 billion last quarter. So Intel's just so money losing right now. And if we look at the free cash flow as well, it's also terrible. I mean, they're losing billions of free cash flow, but hopefully the government can revive the business. They're also losing some market share. This same time last year, they had a 66% PC GPU market share. Now it's only a 63. So anyway, that's great news though. I'm adding to Sezzle. Yeah, man, Sezzle, SEZL. This is one of my favorite fintechs right here. Yeah, then we got to look at Visa, then Nvidita. Yeah, I want to get to all these here. I apologize. United, we just looked at United Healthcare, but we'll look at them again in a little bit. Give me a minute here. So yeah, here's Sezzle right here. I love this company for the margins and the growth. So check this out. If you look at the revenue, incredible. Revenue's up 76% year over year, and they did 98 million in revenue. And on the 98 million of revenue, They made 27 million of net income. Really good. I mean, look at these net margins right here. It says down 7% year over year. They technically had a little one-time adjustment this quarter because it says the net margin was 55%. But basically, this company has incredible margins, 20 to 30% net margins, sometimes even 30% plus margins. So I really like Sezzle. Incredible balance sheet as well. Super amount of deleverage that they're doing. So I wonder why that one tanked so much. Maybe it just had a high valuation. Let's look at Visa, dude. Visa, man. Oh, hey, look at this. This app is telling me, what is this? A bullish continuation wedge. The rise probability is a 95% chance, according to some technical analysis. But Visa is the ultimate just never sell stock. Look at the dividend. You get a 0.6% yield, low payout ratio. But those Visa, they have a shared duopoly with MasterCard. Those small credit card transaction fees that are slowly bankrupting us are making Visa a fortune. What happens is, yeah, hey, Nick, Jeffy, I'm actually on a brokerage right here where you buy stocks and stuff. If you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get 5 free stocks. But anyway, let me get back to Visa right here. The thing is, they return so much money to the shareholders. So check this out. They're making look at that, nearly $5 billion of net income every single quarter. What is Visa doing with $5 billion of net income every quarter? They're spending all that money solely buying back their own stock. They spent $4.8 billion in net income this quarter just buying back their own stock. So here's what the share buybacks are doing for you as a shareholder. Here's what I love showing to people. Look at this net income. Net income is up 8% year over year, but the net income per share is up 12%. That's thanks to the buybacks, man. Incredible. So you own like 3 to 4% more of the company than you did 1 year ago, thanks to them just buying back their own stock. So anyway, let me show you this one. Oh yeah, then we got to look at Nvidita Semiconductor. Thoughts on AMP? I haven't heard of that one, but here's Viking Therapeutics. This one's been kind of disappointing investors because they still haven't sold anything, I believe. This is still a startup right here. So if we go to the revenue right here, the revenue says 0 because this company is still a revenue-less company. They've never sold anything. They're still in startup phase. And investors are just disappointed because they thought they would have been selling something by now, but they haven't. And they're still losing a bunch of money. The losses are getting worse. They lost $65 million this quarter, but the good news is they have no debt at all. Completely debt-free company and $807 million of cash. So they can afford to burn some of this cash because of how much, or they can afford to lose this net income because how much cash they have. So anyway, we want to see that company finally start to sell a product there. So let's see, Nvidita Semiconductor, NVTS. Yeah, hey, we'll look at Spotify. Don't worry. Try not to spam there. Any precious metal stocks? Not really. I mean, I bought RGLD today. If you're looking for a gold stock, I bought today 2 shares of RGLD, Royal Gold. And if you scroll back to the very beginning of the stream, the first stock I analyzed was that company. You can learn about their royalty streams. I'll go over them a little later. But here's Nvidita Semiconductor. Basically, this company was just saved by Nvidia because before that day, the stock was at an all-time low, burning through money with Open Door CEO steps down. That's interesting. But anyway, yeah, look at this right here. The company is before this Nvidia partnership, which hasn't gone through yet, I mean, the company's pretty trash. I mean, revenue's down 30% year over year. They lost $50 million on that. The losses are terrible here. Luckily, they have a really good balance sheet thanks to some share issuance. But yeah, I mean, I'd still be careful with this one, though, to be honest with you. But I got to do more research on them. I got to see what the future is on that company because I haven't really done too much research. But yeah, let's look at Spotify right here. A lot of people love their music software. I wish I was paying for Armani. I do read the comments. Yes. Yeah, hey, Miles, this is a brokerage right here. If you want to get this little software I'm on where you buy stocks, it's in the link tree in my bio, very first link there. But here's Spotify Tech. The stock's at an all-time high right now. Here's what I love about them. I mean, we could see some cool stats here. Their monthly active users are 696 million monthly active users. Their premium subscribers are 276 million of those. Yeah, premium's most of the revenue than the ad-supported. How's the ad-supported business doing? It's up 9% year over year. Premium's up 23% year over year. Really good growth there. But yeah, basically, they had a little one-time adjustment. They didn't actually lose net income this quarter. They really made, it really grew 50% year over year. But yeah, they're making a couple $100 million in net income every quarter. Free cash flow is just as impressive. I mean, it's close to $3-4 billion of free cash flow every year. So deleveraging their balance sheet like crazy. I mean, just an incredible balance sheet on Spotify. So I do like this one, but the only bad news is kind of like a Palantir, the valuation's just too high for me to recently buy into some of these companies. I'd love to buy Palantir. I'd love to buy Spotify, but the valuations are just too high. And I saw Palantir. Yeah, what up, Dreeder? What's up? We'll look at Palantir. Let's do it. So they've been down 3 days in a row. That's probably normal for just healthy RSI retrace, plus the stock is insanely overvalued. I mean, well, look at this. Here's the price to sales. So not price to net income, not price to profits, but just price to revenue is 122. So pretty ridiculous valuation on this company. But here's why they're have such a high PE is because of how growthy they are. The government is half the revenue, and the government revenue is up 49% year over year. That's the highest, growth rate we've seen on Palantir in a very long time. So the government revenue is up 50% year over year. The commercial revenue is also up 50% year over year. So both main segments are growing like crazy. Revenue, they just had their first ever $1 billion quarter. So they did exactly $1 billion of revenue. And on that, $330 million was net income, so good margins. This balance sheet is incredible. They actually have no debt at all. No debt and $6 billion of cash, and that cash is earning interest. So anyway, Palantir is a really cool company, but just a little high valuation. Can you look at bullish? Oh yeah, the BLSH IPO, right? So, a lot of the IPOs recently, basically a lot of the IPOs, they purposely undervalue the stock at their IPO price just so it pops up like crazy. Like we've seen with Circle, Figma, Coreweave, some of these other IPOs. But yeah, this one, let me see. I don't really know what they do. I guess let me see. Are they growing their revenue? So the revenue fell. This is in Chinese as well. So this is an 80 billion of US dollar. Yeah, there's just not much history for me to view on this company yet, so I do apologize. I can't really give you too much thoughts on this one, but yeah, the IPO has been crazy. AMD ate Intel's lunch. Yeah, hey, pretty much. Same with Nvidia. Nvidia and AMD. Yeah. Yo, Loops or Lopez. Thanks so much for the rose there. I appreciate that. Yeah, he said, can we look at INVZ? Yeah, let's do it, dude. Heck yeah. So this is Innoviz Technology. So this one is tough because if you look at the top right, they're only a $340 million company. So kind of think about that. This whole entire company is worth $340 million. Very small company. Here's what they sell though. They sell LiDAR sensors, and 85% of the revenue comes from Germany. So that's interesting. So it's a LiDAR sensor company. Revenue, hey, I mean, again, it's very small, but it is up 40% year over year to $9 million. But they did lose. So, yeah, this is the tough part. So, again, the whole company is worth $300 million, and they're losing near $20 million of net income every quarter. So that's the tough part. I just a tough buy. Really small company with not that much revenue, losing a lot of money. So yeah, let's go look at UNH again because there's a lot of news around this company. So here's United Healthcare. Yeah, they're up 13.5% on the day, solely from Warren Buffett buying this. So Warren Buffett bought shares and he has some warrants. So Warren Buffett got warrants for United Healthcare. It's like Berkshire Hathaway. But yeah, that's why the stock gapped up. Warren Buffett usually does a lot of due diligence before he buys something. And it's saying something if Warren Buffett decides to buy UNH, So if this one starts to tank, Warren Buffett's holding the bag too, I guess. As we know, the PE has collapsed. Basically, if they get accused of fraud, they'll get kicked out of Medicare and Medicaid for a couple years, and that will tank the stock. And that's what it's pricing in the chance of that. Also, this PE is pricing in like the net income for it to collapse like 20, 30%. I don't know if that'll happen. I mean, it did already fall 20% year over year, but yeah, I can see why Warren Buffett bought it. It's tough to buy after today's rally, but yeah, 2.8% dividend yield. He got an over 3% dividend yield on United Health. So yeah, largest healthcare company in the U.S. Coreweave would be amazing. Yeah, let's look at Coreweave stock. If we go back to Nvidia's portfolio right here, Nvidia owns, their main holding is Coreweave, 86% of their portfolio. And yeah, basically, let's see how they're doing. Again, this one also just IPO'd, so there's not too much history, but wow, look at the growth of the revenue. 1.2 billion, up 200% year over year. They're still losing net income, but actually technically they did make money. They made 19 million of operating profit. So that's actually pretty fascinating. I know they also just acquired CoreZ, which is like a Bitcoin mining company, I think. Yeah, dang, they invested 2.44 billion this quarter. That's a lot they're investing. That's maybe why they're so growthy. All right, Viva Systems. What's the ticker symbol for that one? Maybe I could find it for you. IREN. What up, Barella? So yeah, this is a super growth company as well. Look at that, up 5% on the day, nearly an all-time high. Besides this one little candlestick, shooting star candlestick right there. But basically, IREN. Check this out. Here's why I think they deserve to be at all-time highs or a new 52-week high today. They're so growthy. Like the revenue up went from 54 mil to 144 mil, up 166% year over year. So I love the growth there. And on the 166 million of revenue, they made 24 million of net income. So this is now a net income positive company with a really good balance sheet, super growthy. So I like our IREN. Could you please show us the Cathie Wood portfolio? Yeah, Cathie Wood's portfolio is kind of just like the ARKK ETF, Tesla, Roblox, Robinhood, and you can see like Palantir is 5% of her portfolio. Then she has Roku, Spotify, AMD. You can like follow her into this too and like some batch trades, which is kind of cool. But basically, yeah, that's her portfolio. One stock I do love that she owns is Shopify. I mean, Shopify has been so growthy, man. Like, look at Shopify's annual revenue growth. This is why I love them. I mean, the annual revenue just hits a new record every single quarter. And they're just printing money right now, so they're pretty cool. What app is this? Yeah, hey, Lopez. Yeah, hey, this is actually a brokerage right here where you buy stocks and stuff. If you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It's also an affiliate link too, so if you go and deposit $100, we'll both get 5 free stocks. But yeah, I'd love to own Shopify and Roblox, but it's so overvalued. Yeah, Shopify, especially Roblox. But yeah. But they're so growthy. That's why they have high valuations because they're so growthy. Here's one that's been struggling, and this is Salesforce. A lot of the software names have been struggling. You look at Adobe, Monday, Salesforce, ServiceNow. A lot of the software names have been struggling, and look at that. Salesforce is the same price that it was back in, dang, 2020. So if you bought, Salesforce right after this pandemic rally, it's the same price that it is back then. So it's unfortunate, but I love how diversified that they are. Like, look at this. They're in services, sales, platform, analytics. They own Slack. They own a lot of cool products like that. Huge CRM. But I think investors are a little disappointed with the slowing growth on Salesforce. Plus, the thesis is hurting them. Look at this. So basically, without any M&A in the future, this business is probably just going to grow like 7 to 8% from now on. So, mid-high single-digit sales growth. But look at this net income. The margins actually fell year over year by 6%. The net income only grew by 0.5. And if we look at the free cash flow, the free cash flow only grew by 3.5. So I think investors wanted a little bit more growth on Salesforce. But yeah, I do love this company. I think they're going to be a winner in the long run. Yeah, probably one I just never sell. Just hold on to. All right, let's see here. Roblox taking a deep dive because of, I can't say that word, but there's some allegations there. You know what? Let's pull up Roblox again. There's also some other bad news about Roblox that they're just losing a bunch of money. Yeah, that's Cathie Wood's second largest holding, Roblox right here. Dang, yeah, look at that. Down 7% on the day. Let me go to the news tab. I wonder if we can find that. Roblox sued after child safety failures. Okay, that's interesting. By the state of Louisiana. Here's something really cool though. That's a good stat. Then I'll show you the bad news. Here's a cool stat. Look at their daily active users. So not like monthly active users, but daily active users are 111 million. When this exact same time last year, it was only 79 million. So their daily active users grew tremendously from 80 million to 111 million. But here's the bad news. Another thing I don't love. It's because of their stock-based comp. I mean, they're burning through money. Like they're losing 200 to 300 million of net income every single quarter. And their free cash flow is positive, but net income is negative because they issue so much stock to their employees instead of paying them with cash. So that is included in GAAP net income. Yeah, look at this balance sheet right here because you're still paying them a non-cash item. It's still worth cash. But yeah, this balance sheet is a bit leveraged too. Basically the same amount of liabilities as assets. So, but they are growing. But yeah, I don't love Roblox right now. Um, yeah, hey, we just looked at Sezzle, Liam, not that long ago. So if you give me a little bit, we'll look at that one later. Um, Let's see. Username 123 said USAR next. So US rare earth. So yeah, this must just be a rare earth mineral play. What's the market cap? So yeah, very small one, a $1.7 billion company. Let's see. Do they have revenue there? Yeah, they're probably not selling anything. So yeah, look at that. If we go to revenue right here, it says no data because they've never sold anything, not a product or a service. Also, that's not a great balance sheet. I mean, the liabilities just like surpass the assets. So to be honest with you, nothing's really blowing me away here to really want to buy this stock. I mean, maybe it'll move with like MP Materials, but I got to do more research on them. Maybe they have like a mine that they haven't opened yet. ANET, yeah, let's do Arista Networks. I love Salesforce, love the free cash flow. Yeah, with all the AI stuff. Yeah, I feel you. I'm buying AMPX, not profitable yet. Oh, yeah. Hey, we'll look at that one next. My fault. I forgot to look at that one. So here's Arista Networks. This stock is at an all-time high pretty much. So congrats if you own this company. They've been a pretty monster of a performer. I mean, look at this revenue growth. Revenue's up 30% year over year. But best part is this net income. I mean, look, they made 888.8 million in net income this quarter. I mean, they're making nearly 800 million plus in net income every quarter. Really good balance sheet. Look at his cash flow as well. Let me go to the actual free cash flow. Yeah, 1.2 billion of free cash flow this quarter. So just super profitable company. That like they have so much leftover money to play with. How are you, mate? Yo, Rory's, what's up, dude? Good to see ya. Josh said, look at Futu, and oh, I want to look at Novo Nordisk too. You know what? Let me have I do own that company, by the way, over here. I'll pull that up real quick. We'll come back to this will be the next stock we look at, FUTU, because I do own this one. Yeah, near 50% net margins on that company. But let's look at AMPX. You said this is a lithium play. So let's see. Yeah, they've had a nice little recovery the past couple weeks here. Yeah, happy Friday, everyone. Um, let's see. So battery segments. So yeah, you're right. Looks like they're in the battery. Special lithium for drones and other stuff. Great growth. Let's see the growth here. So yeah, look at that. The revenue went from 3 to 15 million. That's a really good growth rate. So we want to see that growth rate continue. Good balance sheet as well. Are they? I'm assuming they're still losing money. So yeah, they are still losing money, but the trend's getting better, a lot better. They lost 50% less net income thanks to the sales growing. So hey, I mean, it's not too shabby. Not too bad. So yeah, I wanted to look at yo, Edzilla, what's up, man? Hope you're having a good Friday. Let's see. Where was the stock I wanted to look at? Yeah, FUTU. What up, Josh? So yeah, I do own 8 shares of this stock, so I might be biased. You know what? Let me go analyze this stock over here. So if you're wondering what is FUTU, what is this company? Well, it's literally just this app that I'm using right now. So literally the software, this brokerage that I'm on right now, this literal app that I'm on right now is them publicly traded. So here's their app. Here's how they're doing. They have 26.3 million users. Client assets are at a record 106 billion. So yeah, they're a brokerage, and half the revenue comes from their brokerage commissions. And here's why they've been doing so good. I mean, look at this. I mean, the brokerage commissions are up 115% year over year, and it's done wonders for their net income. I mean, the net income has doubled to 265 mil. I mean, yeah, nearly 50% net margins. That's incredible. 45% net margin on this company. So anyway, that's why I own this one. They also are so profitable that they sometimes do special dividends. Look at that. They just less than a year ago did a special dividend where you got $2 back in a little cash payment. So pretty cool. Yeah, they're pretty close to an all-time high. So yeah. All right, CPRX update. Hey, yeah, let's look at CPRX. That's another healthcare name that I own. If we go back over here again, this is my risk on portfolio right here. We are up 0.3% on the day. Man, Reddit continues to win, dude. Reddit stock is at an all-time high. If anyone's been watching me for a while, I'm always been bullish on Reddit, and here's Reddit at an all-time high today. You'd think they're a meme company, but they have great fundamentals. Their ARPU, their average revenue per user, is up 50% year over year. They're making like $3.50 per user, per US user per quarter. I don't get how, but they're doing it. Oh, but sorry, let me get back to CPRX right here. This is one of my big losers. They're not huge, but we're down 11% on this company. I want to show you why I think CPRX is worth looking into as a healthcare play. So first off, they're a very small company, but that's what I love about this stock. There's so much upside potential, IMO. A $2.4 billion company. So kind of think about that. The whole entire company is worth $2.4 billion, and they're trading at 12 times net income, first of all. So a dog cheap valuation. They sell these 3 different prescriptions right here, like for Napsy. This one's only up 9% year over year. That's why I think the stock fell a bit. So revenue's up 9 on that one. Ficoma's down by 6. And Agrami, this one's been a huge growth driver. They literally created this a year ago. It was $1 million in sales when they released it. Now it's $27 million this quarter. Really good growth. But if we kind of average all those together, revenue's up 20, net income's up 27. First off, look at this net income. Remember, this is a $2.4 billion company. They've made over $200 million of profits this quarter. So yeah, that's why they're trading at a 12 times net income. Also with no debt at all. Remember, $2.4 billion company with $650 million of cash and no debt. So you might as well subtract $650 million from their market cap to an X-cash PE multiple, because literally 30% of the business is just cash on hand. Cash is earning interest with no debt. Plus the free cash flow numbers are ridiculous. So I just love that one financially. Pretty cool. I don't see many companies with that good fundamentals financials. So, Ben said NVMI. NVMI. What's this one? NVMI. So it's called Nova. Haven't heard of this one before, but a pretty big one. A $7.6 billion market cap. They're up like crazy since 2019. In 2019, this was a $40 stock. Now they're at $258. So let's go see what they do. So they sell products and services. Well, here's where the revenue comes from. Do beware. So check this out. 40% of the revenue comes from China, then Taiwan, then Korea. So be careful. Only 15% of the revenue does come from the US, but let's go analyze them. So first off, actually, this looks great. Revenue's up 40% and the net income's up 51%. So that means they're growing their net margins, 30% net margins. Hey, who cares where the revenue comes from if the business is this good? I mean, that's really good net income numbers. A great balance sheet, deleveraging as well. So yeah, actually, I do like NVMI. Besides where the revenue comes from, I mean, China, Taiwan, Korea, they seem pretty good, very good financially. So yeah. I keep seeing people say RR stock. This is a junk company. You don't want to buy Rich Tech Robotics. They have no IP, no patents, no nothing. It's a $300 micro cap with no financial. So this is a $300 million robotics company. Like, out of all the robotics companies, why would you choose Rich Tech Robotics? It's a terrible buy, in my opinion. They have $1 million in revenue a quarter, losing a couple million. It's just not a good robotics company. I'd rather buy a Symbiotic or an Amazon than them. Hey, Nathan, do you think Powell is a good buy right now? Yo, Eric, you talking about Powell Industries, ticker symbol POWL? It's an okay buy, not a great buy. I mean, the PE, what's it at? A 17, it could probably go back down to a 15, but there are some short reports. So here's the thing with this stock or your Powell Industries. Literally, let's see how many shares. 15% of all the shares are being shorted. So this is a kind of high short squeeze potential stock. 15% of all the shares are being shorted, but I do own this one. I bought all my shares this day right here. You get really nice dividend growth on that company as well. Which country got good gold quality? I don't know. America, right? Canada. Any stocks you think are perfect to make into a core position? High tech? Yeah, absolutely. Here's what these are never sell stocks in my opinion. And I own them for a reason. Dang, look at that. We're at a new intraday low right now. So not great. But here are all the stocks that we own in here. Here's some picks I would, not financial advice recommend, but Google, Meta, Constellation Energy, the largest nuclear energy reactor company. Check this out. CEG. This company owns like 50% of all the U.S. nuclear reactors. So pretty incredible. All right. So best stock to buy right now in your portfolio? Well, I don't really know. I only bought one thing today. The only stock I bought technically was RGLD. It's a little bit of gold. My only gold exposure position. Hey, Samir, what's up, dude? And Lopez, thanks again for the rose. I appreciate that. Yeah, let's look at Novo. So this ticker symbol NVO right here, this is Novo Nordisk. This is that weight loss prescription company. And what up, Locker? We'll look at PanW as well. But here's Novo Nordisk. This is that weight loss prescription company. And look at this. So 93% of all the revenue solely comes from their obesity care products. So this is a weight loss play. And they're printing money right now, over 4 billion of net income every single quarter. And this is in US dollars. This isn't an American company. They're a European company, but get a 3.4% dividend yield. But I think one of the reasons the stock has been struggling is because they gave an update on their patent. Their Ozempic patent expires in a couple years. So that's not great. And maybe the stock's kind of pricing that in. But for right now, the fundamentals are incredible. They're printing net income. Are they doing buybacks? They are not. I mean, they bought back 0.6% of the company in the past year. But anyway, yeah, this PE is a 13, dog cheap PE for a great company. So, all right, let's see. Any tips on someone who wants to start investing but has no idea where to start? Yeah, hey, most people would, go buy my book or courses. And by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. Watch out. Also, I'll never follow you or DM you or I sell you on anything. Literally none of that. I'm literally just on here giving my opinion. The only thing I do have is a YouTube channel. So if you want to help me out, only way to support me, best way to support me is subscribe to my YouTube channel. I'm streaming on there as well. My YouTube channel is called Nathan Robert. My YouTube channel is also in the link tree in my bio, but you can just type into YouTube Nathan Robert. But yeah, I just buy the S&P 500 for the majority of your portfolio. Ticker symbol VOO. Most investors can't outperform the VOO. So VLoan, oh wait, whoa, there was a stock I wanted to look at. Yeah, Locker said PANW. You know what? That's a stock owned by Nancy Pelosi. So, these super investors have to make all their trades public, by SEC law and everything. And one of the stocks that Nancy Pelosi owns is PANW, Palo Alto Networks. This is a huge cybersecurity play, I think the biggest cybersecurity stock out there. And, this is an industry that's going nowhere. We're always going to need cybersecurity, with AI and hacking always getting better. And I love subscription model companies. Check this out. 55% of the revenue comes from their subscription model. And look at this. I mean, this is what I can trust. I mean, the revenue literally just hits a new record every single year, every single quarter. And that's what I love to see for Palo Alto Networks. So the subscription revenue is at a new record. The free cash flow numbers are ridiculous. 500 million plus a free cash flow a quarter. A couple hundred million in net income as well. So yeah. Hey, what up, Charles? Yes, sir. Is this Weeble? No. But I do have a Weeble account. Here's my Weeble account. Yeah, this is my Weeble account is my risk on account where I got a lot of riskier kind of stocks. Hey, T-Mobile is having a great day, up 2.2. PSIX is up 5. But AMD's down 2% on the day. All right, let's keep going here. What are some best recession resistant stocks? You know what? Actually, one of the best recession resilient companies is actually McDonald's. Where in a recession, this company actually does good. Check this out. 2008 was a devastating year for a ton of stocks. You look at a lot of stocks in 2008, they all tanked, but not McDonald's. McDonald's and Walmart were actually the two best performing stocks in the S&P. So Walmart and McDonald's are two great recession resilient companies. McDonald's in 2008 actually acquired a bunch of cheap land. In a recession, McDonald's sales actually go up in a recession because people stop going from Chick-fil-A. If you got to feed your family, you'll stop going from Chick-fil-A and you'll go to McDonald's, something like that. Anyway, pretty cool. What website are we? Yeah, hey, Lemira, if you want to get this software I'm on, it's my favorite one to analyze stocks, favorite brokerage, lowest fee, most useful. It's in the link tree in my bio, the very first link there. It's a brokerage. You can buy stocks in here. It's an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. Pretty cool. So let's keep going. Edzilla said, do you like Plug? Seems to be a lot of hype around it. I actually don't like this company because of the money burning that they do. So yeah, here's the thing. Look at this market cap. This is how much the whole company is worth. So kind of think about this logically. The whole company is worth 1.97. Let's just give them the benefit of the doubt. Let's round up to 2 billion. So this is a company you're buying at a $2 billion valuation. So you're buying a company worth 2 billion and they literally lost over 200 million just this quarter. So that's 10% of the entire company they lost just this quarter. And look at last quarter, they lost another 200 mil. Quarter before, 1.3 bill. I mean, they've always just lost so much money. I mean, I couldn't imagine trusting this company with these net income losses. So unfortunately, that's why this stock is at an all-time low. Could be a fun little momentum swing trade, but they have a high real chance of bankruptcy and just going to zero. Hey, here's another one I don't love, but I'll check it out for you, JSSO. What's up, man? He said Joby Aviation. There's some here's the one thing I can't get around about this stock right here. So, oh wait, hold on. Read this news here. Joby Aviation completes first flight between two US airports. Well, they say first flight. Yep, that's true because this is a startup right here. They have no sales. So look at this. The revenue was 15,000 this quarter. I mean, that's nothing. Revenue of 15,000 this quarter, and they lost 300 million. They're losing a couple hundred mil a quarter with no sales. So the good news is it's kind of backed by Toyota. Toyota owns 15% of all the shares, but again, I just can't pay a $15 billion valuation for this company that still basically has no revenue. Hey, what up, Josh? Good to see you, man. So let's see. ONDS Entry Point. What's this company? Is that Ondesk? So yeah, let's see. I forget what this company does. So a $1 billion company. So just over $1 billion market cap. So Ondesk Autonomous Systems. Look at that revenue growth. I mean, it is at kind of at a new record here. Again, only 6 million. So yeah, it's easy to kind of grow small numbers. Revenue went from a 900,000 to 6 million. Again, very small numbers we're talking about here. It's easy to grow them. They did just deleverage their balance sheet a good chunk, so maybe they issued some shares. But yeah, they're losing 10 mil a quarter. Not the end of the world. So I guess we kind of want to just see the growth continue. But yeah, they did beat on revenue. They beat on net income and missed on EBIT. So yeah, I don't know. Mixed bag. Just a small company. I'd still be careful with that one. What's the app? Yeah, hey, Vittor, I'm on a brokerage right here. If you want to get this software, I'm on right here. It's in the link tree in my bio, very first link there. So let's see here. Graco said Intel. Yo, we'll look at Intel again. I'll be quick about this one. I think it was like the literal U.S. government took a stake into Intel. Does anyone remember the exact news? Like it was something like that, like the literal U.S. government. Yeah, look at the kind of second news here. Intel stock extends rally on prospect of U.S. taking a stake. So imagine that the government just owns part of Intel now. But here's the tough thing about this stock. I mean, they're just burning through so much money. I mean, they lost $3 billion this quarter, $1 billion last quarter, $16 billion this one quarter. I mean, I don't know how that's even possible. I mean, this company used to be so profitable. I mean, ever since they lost their partnership with Apple, I mean, this stock has just been terrible. I mean, they used to make $5-6 billion a quarter, and now they're losing money. And here's the thing, Intel, even after this little rally, if you scroll out to the monthly, Intel is the same price that it was back in 1998. So imagine now, you bought the stock in 1998, it's the same stock price today. I mean, it's unfortunate. But yeah, again, it's good that the government's taking a stake, but I don't know. I'd probably rather just stick with AMD, Nvidia, maybe even a Marvel Technology. That's probably the cheapest semi play right now. So yeah, it's probably Intel's like a value play, kind of a recovery play. Maybe the government can help them out of this. They still have a pretty big market share. Oh yeah, let's look at Eli Lilly right here. So Eli Lilly, they just reported earnings, and the stock basically gapped down on bad results from their weight loss prescription pill. So normally it's like an injection you have to take for their weight loss prescription, but they made a pill version. The pill version just didn't work. So that's why the stock tanked. Even though they beat on revenue, beat on net income, and beat on EBITDA, it was a triple beat. It was just that one reason the stock fell. So that's why I've been saying, I think this one's probably going to recover after this huge dip because that was the only reason the stock fell. And here they are, the past 3 days having 3 amazing candles. So yeah, congrats if you own Eli Lilly. I think they're going to be a winner in the long run. So let's see. Matthias, what's up? Or Matthias, he said on stock. This I think just owns like a UGG. They're like a shoe company. Let me see here. So yeah, 95% of the revenue comes from their shoe sales. But look at this net income. I mean, this is kind of was that an adjustment? Yeah. So technically, this was a one-time adjustment. They didn't actually lose net income this quarter, but yeah, they actually made 92 mil. So roughly about 70 mil of net income this quarter. So yeah. Not too bad. This company's really been taking market share from Nike ever since Nike dropped a lot of the retailers like Foot Locker. Foot Locker had to put in their shoes. So yeah, anyway, that's interesting. They have been struggling recently. Is 86 PE justified for this price? It's actually not 86 PE. Like I said, remember the PE is the price of net income. their net income went negative this quarter. It shouldn't have. It was a one-time adjustment. So the PE is really like significant, like less than half of that. It's probably like a 28 or something. All right. Let's see here. Can you tell us about Archer Aviation? And yeah, I don't love these aviation names. Like I keep Surf Air Mobility. Like we're not really going to look at these. They're all revenue list startups. I mean, we'll look at SRFM. I mean, let me just make sure that this is a startup right here. Surf Air Mobility. Yeah. Well, revenue is 27 million. They have way more liabilities than they have assets. They're not losing too much money. But yeah, I mean, they lost the growth. I mean, revenue's down 15% to 27 million, lost 28 mil of net income. So yeah, this is a $190 million company that lost 30 mil this quarter. They have more debt than the whole market cap, and I don't know. They're just all momentum names right now. What type of stocks do you recommend? Profitable, growing, great companies. And I don't always follow that. Like I have some stocks in here that aren't like that, but for the most part, I try and buy good companies that have great sound fundamentals that aren't like revenue-less startups with no financials and burn net income. So yeah, I like SoFi. I'm in long. You know what? Yeah, let's look at SoFi, man. I love this company. Like, here's a great growth company. Like, even though the PE is ridiculously high on SoFi, they deserve it because of how growthy they are. Like, check this out. Here's SoFi Technology. What's the PE? So the price in net income is a 47. So they're trading at 47 times net income. Here's why they might deserve it. Someone said, do you have a WhatsApp account? Nope. I don't have a Discord, WhatsApp, Telegram. I don't sell anything. I have no course, book. Yeah, Willie, watch out for people impersonating me. I have none of that. So anyway, here's what I love about SoFi. Here's why they're so growthy and why they deserve the high valuation. Look at their financial services business. This is the impressive part. The financial services business grew 105% year over year, literally to a new record. The business just hits a new record every year, every quarter. So incredible growth on the financial services and the lending. Lending's up 30% year over year. But basically, look, revenue's up 42%. Really good revenue growth, and investors are really starting to take them serious. They made $100 million of net income this quarter. So they're just really profitable, and people are starting to take them serious. And they're super growthy as well. So yeah. Where do you check on Webull if a company is trading at its value? What do you mean at its value? I'm not sure there. And I'm not on Webull right now. I do have Webull though, but I'm not sure what that means there. If a company is trading at its value, like fair value, I don't know. Let's see. Opera AI browser. Yeah, hey, ABHI. Yeah, the Opera GX browser. Has anyone seen an ad for that before? They're actually in my debt-free watch list. So check this out. Here's the Opera GX browser. They are Chinese. Like I think the largest shareholder is like one Chinese person. Yeah. So but basically, here's the good news about the Opera GX browser. I mean, first off, this company has no debt whatsoever. So this is a debt-free company with $103 million of cash. So 103 mil of cash, making 20 to 30 million of net income every quarter. Sales are up 40%. So yeah, this one I know is a huge play where if Google has to sell off Google Chrome for regulation purposes, this one would be a huge beneficiary. So revenue's up 40. Free cash flow of 20 mil a quarter, basically. So yeah, I mean, they're still a small company, but yeah, the low PE, yeah, like a mini Google Chrome almost. What software is this? Yeah, hey, this is another brokerage where you buy stocks, and if you want to get this brokerage I'm on, it's a brokerage called Moomoo. It's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get 5 free stocks. Yeah, I like to buy my stocks in here. I keep my idle cash in here, and lowest fee, best free tool brokerage in my opinion. Or you can type into Google. It's a brokerage called Moomoo. BYD. Yeah. So this is a Chinese company that basically competes with Tesla. They're way more profitable than Tesla. Like their cars, these BYD cars would be everywhere if we didn't have tariffs on China. So here's another thing. Warren Buffett owns BYD. He doesn't own Tesla. So they are Chinese, so we'll switch their currency to US dollars just so we can get a better idea of how they're doing. So net income was 1.3 billion just this quarter in USD. So yeah, they're extremely profitable. And with this company, you actually get a really nice dividend. No dividend on Tesla, But on BYD, you get a 1.3% dividend yield. Not too bad. So yeah, that's basically just the Chinese Tesla. So oh, hey, Terry, what up, dude? He said CVX Chevron. You know what? That's a Buffett stock. So if you go to Warren Buffett's portfolio, and hey, Warren Buffett, this just got updated. Warren Buffett just bought some United Healthcare. But anyway, here's Chevron right here. He loves the dividend stocks, and oil stocks have high yields. So check this out. If you buy Chevron, it's like a gas station. Look at that. You get a 4.3% dividend yield with Chevron. Pretty cool. So that's what's cool about oil stocks. They usually have high yields, low valuations. Oil usually does good in more recession times. And yeah, the net income did fall 43% year over year, but that's basically just from oil prices. But yeah, really nice yield there. You get 1% of your money back every quarter in a qualified dividend. Pretty cool. Now, I need to charge my phone. Uh-oh. Yo, Ryan said Ford stock and Roblox, Zeta. Yeah, I want to check out all these. So here's Ford. Unfortunately for Ford, they are literally lower than they were in the year 2000. So you bought the stock in the year 2000, you're actually down 50% on your shares. So again, I don't really think Ford's going to outperform the market in the long run. It's just not a great business. But if you do buy the stock, here's the one thing you do get with this company. You do get a 6.55% dividend. And dividends are paid quarterly, so every 3 months. But there are some exceptions. Some companies pay monthly dividends, which is kind of cool. But yeah, Ford pays a quarterly dividend. Same with that last stock we looked at. But yeah, Ford, it's tough business with the tariffs and stuff. A Ford, unlike a Tesla, all the parts are like American. Like a Ford is really like so many parts from other places of the world. It's like, anyway, let's keep going here. Zeta, yeah, so this is a really cool growth company. Look at that, they're up 6.6% on the day. Yeah, they really gapped up on earnings right here on some pretty good earnings. So let's check this out actually. So if we look at the orange line is what the analysts were expecting. They beat on revenue, they beat on revenue. They beat on net income and they beat on EBITDA. So this company just triple beat on earnings and they're really growthy. Revenue's up 35, then losses are narrowing 55% better. So the margins are really improving faster than the sales are. So really good balance sheet as well. Deleverage, that liabilities used to be 63% of the assets. Now it's only 38 while growing the assets. Yo, Don Rich, 63. Thanks so much for the little gift there for the rose. I really appreciate you, man. If you got a stock you want me to look at, let me know. How do you check if a company is trading at its value? Yeah, I don't know what that means there. What do you mean at its value? If are you talking about the PE ratio? Maybe you're talking about the valuation like this right here. Like Coca-Cola, they trade at a 16 PE versus the industry average of a 26. All right, let's keep going here. The HIMS stock. Yeah, let's look at HIMS right here. So a lot of people think this is a meme company, but they're super growthy right now. Check this out. So they have been kind of bleeding out the past couple of days here. So I will show you this. They did miss on some metrics, like they missed on revenue, they beat on net income, but they missed on EBIT. Here's what I like about HIMS, and there is some future uncertainty with this. Like the revenue grew 72%. That's really good growth. The revenue's up 72% year over year, but they used to sell this weight loss prescription, Ozempic, and Ozempic, this weight loss prescription on their website brought a lot of their growth, but now they no longer sell any weight loss prescriptions, and that will maybe hurt on their future growth of the revenue. But yeah, they are making net income every quarter, free cash flow every quarter. Well, they actually lost 60 mil free cash flow, but yeah, they also just issued some debt that. So basically, look at that. The cash went from 300 mil to 1.2 bill. The assets went up with the liabilities. So pretty cool. Zach said, what app is this? Yeah, hey, Zach, I'm on a brokerage right here. So if you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. Let's see. Him's facing lawsuits right now from customers. Oh, that's not good, Harold. That is not good. So let's see here. Yeah, let's go to we kind of just looked at Roblox not that long ago. Yeah, so actually, we'll look at Roblox later because we just looked at them. So let's look at ASML right here. So here's ASML. This is a European company. So here's the thing. The companies this company, the financials are at its all-time best, all-time high, but the stock isn't. So, like, check this out: the revenue's up 35, the net income's up 86. They've really expanded their net margin here. Look at this: a 35% net margin in the most recent quarter, record everything. But it's the guidance that sent the stock down. So basically, this company guided for next year single-digit revenue growth. So the business is only going to grow at single digits the next year, which I don't think investors really expected, and they didn't love that. So that's why the valuation had to collapse. I mean, look at this PE now. Yeah, the PE is a 26. That's a really low PE versus what it historically trades at, because they kind of just forecast a lot lower growth than expected. So if the growth rate slows, the multiples got to slow down too, unfortunately. But yeah, let's see. Don't worry, we'll get back to Roblox after Oracle. Let's see. ORCL. Yeah, this is a huge cloud play. Roblox getting sued by Louisiana. You're right. For safety issues. For children. But here's Oracle again, a huge cloud play right here. Dang, I need to get my phone charger. So anyway, here's Oracle. Here's the good news. 85% of the revenue is just from their cloud and license revenue, which is pretty cool. And look what that's doing to their net income. They're extremely profitable. Look at this: 3.5 billion in net income this quarter. 3 billion last quarter, 3 billion the quarter before. So they're literally making over 3 billion of net income every single quarter. So yeah, they're just a really profitable company. I know they have a nice dividend as well. I don't know if I'd buy them at all-time highs here though. What do you think of ATNF? ATNF. What's this one? 180 Life Sciences. So a $1 billion market cap. I wonder what they own. So they're still a revenue-less company. So if we go to revenue right here, it says no data because they haven't sold anything. So it's a revenue-less company, not losing that much money. Again, I don't know what this company does. I wish I could give you more thoughts on them. Clinical stage, biotech company, unmet inflammatory disease prevention. I don't know. I wish I could give you more thoughts on them. But yeah, it seems like a really risky company. Only $1 billion market cap with no revenue yet. Maybe the reason the stock's going up is because they're maybe got FDA approved or something. Who knows? I don't know. But let's go back to Roblox right here. So if we go to Cathie Wood's portfolio, Cathie Wood is a big shareholder of Roblox. And yeah, basically, Roblox is getting sued by Louisiana right now for, where was the news tab? I don't want to say so. Oh yeah, whoa. Roblox stock gets punished as outrage rises against the platform for enabling child abuse. I don't know, but let's go see how they're doing. So check this out. Here's one cool thing. This is their active users. And here's a cool metric. We get their daily active users. So this same time last year, their daily active users were 79 million. Now this quarter, it's 111 million. So the daily active users have increased like crazy, which is great news. But one thing I didn't like about this company are the net income losses. They're losing like 200 to 300 million of net income every quarter because of all their stock-based comp. So this company does issue a lot of stock to pay to their employees. So that's why the net income's negative when the free cash flow is so positive. And they have a bit of a leverage balance sheet. But yeah, that's I think that one's a bit too high of a valuation. All right, let's see. Oscar Health. Yeah, I wanted to look at that one. This is another Medicare Medicaid company that's kind of been taking over a lot of market share. And again, they're up 6% on the day, probably because of the UNH. This one kind of moves with UNH. And again, it kind of moves with UNH in the same downward and upward, direction, because they tank down here on the same, regulation around the industry. So Oscar Health, here's what I like about them though. They're so growthy, man. Like, look at this annual revenue growth. I mean, it literally just hits a crazy new record every year. Like for the entire year 2020, the full year 2020, the revenue was 590 million. Now it's 9.2 billion for the full year 2024. So incredible growth on that. So QQQI, is it good long term? It's actually not good long term because this is a covered call ETF. Do you really want to be selling calls on the NASDAQ in the long run? Definitely not, in my opinion. But you're buying this to maximize your dividend income. Yeah, that one, not good long term. You just buy it to maximize your dividend income in the short term. United is up. Yeah, United Healthcare is doing great. Um, yeah. Open Door. I mean, man, Open Door. This isn't. I think the Open Door CEO just stepped down. I believe there was some news like that. Wait, let's see. After CEO Wheeler steps down, maybe that's good. That maybe it's good that the CEO stepped down. This company is basically begging for lower interest rate environments. For a lower interest rate environment. So if we go to the revenue right here, the total revenue, I mean, it's 1.5 billion this quarter. If we go to 2021, I mean, look at this. It was like 3 to 5 to 4 billion every quarter. Now it's, significantly fallen because of the high interest rate environment. But yeah, they're still losing like 100 million of net income a quarter. So we do want to see the losses narrow. But yeah, I just don't love that one. I plan to hold those covered call ETFs for about 1 to 2 years. I can push the dividends into some other monthly div stocks. Hey, what up, Alfred? Nice. Um, so Reed said TWLO. Is that Twilio? So yeah, here's Twilio stock. They gapped down on earnings. Let's see if we can figure out why. It says Twilio is set to join the S&P 400 mid cap ETF. So they're in the mid caps now. So Twilio Communications, I know this is like a Cathie Wood pick right here. Revenue's up 15% year over year. Well, let's see. So they beat on revenue, they beat on net income, and they beat on EBITDA, but the stock tanked anyway on earnings. You look at that. So the revenue's up 13%, and they're finally net income positive. They used to lose a bunch of net income, over 100 million in net income a quarter, but now they're making net income every quarter. Really good balance sheet as well, no debt. Let's see how much cash. $2.5 billion of cash. I mean, are they doing share buybacks? Plus 170. Yeah, they've bought back 3.5% of all the shares that exist in the past year. Pretty interesting. It looks like the fundamentals are at its all-time high. What should I invest in long-term? Probably you want to pick like just great companies. The S&P 500, Google, Meta. What was the other stock Warren bought along with UNH? I heard he bought two. I actually don't know which one he bought, Dylan. Or Chief. I don't know which one he bought, Chief. But what up, Dylan? He said HIT stock. What is HIT? So health and tech stock. Let's see. So a very small one, only $190 million market cap. Yeah, we'll look at Pepsi too. So $190 million market cap. So very small, but they've had this monstrous rally recently. Let's see if we can figure out why. So they made net income, no way. So the revenue's up 90%. And on that, they made $600,000 in net income. And that was real. They really made real profits. They deleveraged the balance sheet. Actually, even though they're a very tiny company, I can see why they're doing so good. That's really interesting, actually. All right. I think they're a fintech famous outside the US. Oh, wait, let me see Pepsi. And then we'll get to DLO stock and then UUU. Yeah, we'll look at some of these names. So here's PepsiCo right here. They've had a nice little recovery these past couple weeks here. Look at that. I think the dividend is going to be safe on this company because check this out. You get a 3.6% dividend yield. The payout ratio is a little high in 80%, but I think, they're going to end up being safe. I love them because of the Frito-Lay business they own as well. So they don't only just sell a bunch of drinks, like they own Gatorade, Pepsi, and a lot of drinks and stuff, but they also own Frito-Lay. So they own Doritos, Cheetos, Fritos, Lay's, potato chips, Kettle brand chips, a lot of food, obviously. So that's what I like about PepsiCo. And I think the dividend's going to be safe on this company. Also, they're making a couple billion in net income a quarter. But yeah, you're basically buying them for the dividend. You get the nice 3.6% dividend, but the net income did fall 58% year over year. It was a one-time adjustment, so we do want to watch this net income number and the sales growth because the revenue only grew 1% year over year, so we do want to see some more growth come to Pepsi. But yeah, nice dividend play. NUE stock, is that Nucor? Yeah, so this is another nuclear play, I believe. So yeah, if we go to the revenue right here, or no, oh no, this is a steel play. Actually, this is one of my favorite steel stocks. So out of all the steel companies, a lot of them are losing net income right now, like United States Steel, some of these other ones. But this company still is making net income every single quarter. So that's what I like about ticker symbol NUE, probably my favorite. Again, I don't really want to own steel with a huge position, but if I did want exposure, you get a nice 1.5% yield, safe payout ratio, and they're making net income every quarter, billions a year. So pretty cool. Let's see. If we lose him, then we'll know the phone died. Yeah, man. Look, wait, WKHS due to merger today. WKHS, Workhorse, who they merge with? Dang, wait, this stock's at an all-time low, man. That's not good. Yeah, we're not even going to cover this company. This is a $15 million micro cap at an all-time low. Yeah, I don't know what that one is. Can you check Roku? It's also one of her stocks. Yeah, Harold. Yeah, if we go back to Cathie Wood's portfolio, you're right. So check this out. One of the stocks she owns is Roku. Here's kind of been their business model. They sell you a TV for break even. They make no money on the TV, the physical hardware, but it's the software, the subscription they sell you on. And you look at their ads and stuff. So yeah, we can kind of see this is their ARPU. ARPU stands for average revenue per user, and it's $41.49 per user. Pretty crazy. And we can see their streaming hours as well, 35 billion. But yeah, they're just now starting to get net income positive. They actually made net income this quarter. So when they've never made any net income before today. So this is great news that they're finally starting to make net income. Revenue's up 15%, growing nice double digits. So hey, yeah, they're interesting. They're partnering with Amazon. Yeah, you're right. Amazon and Roku do have a huge partnership. Yep. NUVB stock, please. What's this one? NUVB, Nuvation Bio. So another very small one, $900 million company. Let's see. Do they have sales? So sales were $4 million. Not great, especially wow. They lost 60 mil. They lost 200 million this year, and the whole companies were 930 mil. That's rough. So they've lost literally 25% of the entire market cap in net income the past year. So if these net income losses don't start to narrow, there's like real bankruptcy risk here. Despite the decent revenue growth, again, revenue is only 4 million, but yeah, they did leverage up a bit this quarter too. Check Snowflake. What do you use to check Cathie Wood's portfolio? Yeah, Sensei, you just go to the Discover tab right here, and you click on Insights. Yeah, we can see all these portfolios right here. These are all super investors. They all have to, by SEC law, make all their trades and holdings public. So yeah, we can see like the Soros holdings and all his stocks. And you can kind of like trade it as well. Like if you like Nancy Pelosi's portfolio, you can follow her into the trades. You can batch trade all her holdings. Oh, sorry. Yeah, my phone's getting low here. Let me go get my portable charger right here. 1 second, because this is not good. My phone's probably gonna die on me. Hey, by the way, if y'all want to support me, make sure to hit the follow button. I sell nothing, by the way. I have no course, book, Discord, WhatsApp, Telegram. I'll never DM you or follow you. Watch out for people impersonating me. I don't sell anything, but if you do want to support me, best way to support me is just subscribe to my YouTube channel. YouTube channel is called Nathan Robert. I'm also streaming on there as well. So yeah. Yo, we're not gonna look at Rich Tech Robotics. Why do people keep saying Rich Tech Robotics? Yo, this is the worst robotics company I've ever seen. So if I wanted Rich Tech, if I wanted robotics exposure, this is not the one that I'd want to buy ever. So first off, look at the market cap. Like this is a $300 million company. So first off, this is a micro cap at all-time lows. A $300 million company. This is a business that literally does $1 million of revenue a quarter. This out of all the robotics companies, like this is one of the worst ones. I mean, I'd rather go with a Tesla and Amazon, even though they're not pure plays. I mean, I'd go with the Symbiotic over this one. So the revenue is $1 million. Like they have no IP, they have no patents like Symbiotic and Amazon and Tesla do, and they're losing a couple mil every quarter. So they've been able to fortify their balance sheet through diluting the life out of the shareholder. If you're wondering, like, how their assets keep growing every quarter when they literally do $1 million of revenue a quarter and lose net income every quarter? Well, all of their cash they've gotten has come from diluting the dumb shareholders that have kind of rallied this stock up. So anyway, I think that one has real bankruptcy risk. Yeah, I don't mean to be so bearish on that one though. Hey, it could do good though. It could do good for sure. There could still be money to be made on that. I think Symbiotic, this is a great robotics company. This is a warehouse robotics company that has They have real revenue, real patents. Their main customers, Walmart. Like, check this out, actually. Walmart loves this company so much since they're the biggest customer. Walmart's a second largest shareholder. Walmart decided to buy 13.5% of all the shares that exist. And also check this out over here on Symbiotic. They have huge growth of the revenue. I mean, they're doing 500 mil plus of revenue a quarter. They are still struggling with net income positivity, but the trend is definitely getting better. And they're only losing like 30 mil a quarter. Those are very manageable losses. So Symbiotic is one I really like as a pure robotics play. This is a warehouse robotics play. And Amazon as well. Amazon, again, not a pure play, but another just winner in the long run. Honestly, Amazon's the best robotics play out there. Oh, hey, nice. Yeah, Walmart's the largest customer of Symbiotic. Yep. So let's see. All you need in life is Tesla, Nvidia, and Bitcoin. Hey, those have been some good performers. Not Tesla so much. I don't love Tesla. Just because the valuation is pretty nutty. What platform are you using? Yeah, hey, I'm actually on a brokerage right now, JC and JXXL. It's actually a brokerage where you buy stocks and stuff. It's called Moomoo. It's in the link tree in my bio. It's the very first link in the link tree in my bio. It's also an affiliate link too, so if you go and deposit $100, we'll both get 5 free stocks. But yeah, lowest fee brokerage in my opinion, best for analysis and stuff. Like, let's see. Tio said, "OYY, please analysis." I got you. Wait, let me know. Are you talking about this? What country is this from? SG. What country is that? I should know that. That's the flag. Is this Singapore? You know what? We're gonna switch first off, it's not an American company, so we don't. This is all the revenue comes from Singapore. So this is a Singapore company. 100% of the revenue comes from Singapore. So again, I don't love like foreign stocks like this. You might get a weird foreign tax form. You might have to pay some weird ADR fees and taxes for owning this stock. But it looks like the stock's at an all-time high, though. So, yeah, congrats if you own this one. Look at that absolute monster of a rally it's had recently. They're making net income every quarter, so they're profitable every quarter. Let's see. I wish Apple would crash all their monopoly overview. Hey, you know what? AAPL. Apple, I love this company right here. It's like a perfect never sell stock. You just buy Apple and then just forget about it. So let me show you this right here. Here's what I love about Apple. First off, the PE is a 35 historically. That's a little high, but not the end of the world. Look at their huge smartphone market share. So they have a 19% smartphone market share, which is, huge. That's where most of the revenue comes from. Literally half of the revenue, 47% of the revenue just comes from the iPhone sales. Then they have the services business, which is really cool. So if you actually go spend $100 in the App Store, go buy some Clash of Clans gems or something, $30 out of the $100 goes back to Apple as a high margin, near 100% margin royalty. So the services business is actually the business that brings the most of their net income. Then they sell the Macs, the accessories like the AirPods, the watches, and the iPad. Here's also why they're a bit affected by tariffs. Look at this. Only 36% of the revenue comes from the United States, 25% EU. So yeah, they're headquartered in America, but you really get exposure to all these other countries as well, which is pretty cool. So yeah, and they also have the largest buyback program of any company on earth. So here's kind of what the buybacks do for you. If we look at the net income grew by 9.2%. But the net income per share is up 12% because there's less shares that exist. The share part of the ratio went down. So that's how the net income per share is higher than the net income, thanks to the buybacks. You own nearly 3% more of the company than you did a year ago. Pretty cool. Let's see what happened. Yeah, hey, Amet, this is a brokerage again. If you want to get this little software I'm on, it's in the link tree in my bio, first link there. You ever play Leaps? No, I don't really do much options right now. I mainly just buy and hold great stocks for the long run. Review Neo. Yeah, Jeremy, this is not a great one either. And Sibucio, what's up, man? Good to see you. So here's the thing with Neo. The stock is pretty much at an all-time low right now. So kind of remember this. This is a $10 billion company. So this is this is Chinese, but they're a $10 billion company and they lose. Oh, hold on. So first off, we're going to convert the currency from Chinese to US dollars. They lose $1 billion of net income every quarter. So this is tough. Again, a $10 billion company that lost $1 billion this quarter, $1 billion last quarter, $700 million the quarter before. This company, in my opinion, has real bankruptcy risks. And that's why if you zoom out on the stock, they're at an all-time low. I mean, they're also issuing shares, they're diluting you while the stock's at all-time low. So is this one that I would buy on the dip? Probably not, because I sadly think they're going lower, unfortunately. Yeah, hey, people kept asking about Roblox. We just looked at Roblox, dude. Like, give me a minute and then we'll look at them again. Yeah. There is some controversy around Louisiana suing them and stuff. You're right. Oh, yeah. I wanted to look at DLO right here, D-Local. I believe this is a fintech or something. But yeah, look at them yesterday. Huge gap up on earnings. So let me show you what the earnings were. And so let's see. Yeah, look at this right here. So the orange line is what the analysts were expecting. And look at the huge beat. So they had a huge beat on revenue, a big beat on net income, huge beat on EBIT. So that's why analysts are really happy. That's why I sent the stock up a bunch. And also, you do got to be careful. This is like a transaction, like currency conversion kind of company, fintech right here. So look at this. Like, look, notice the US isn't on here. So all the revenue is, coming from like South America and other places like Brazil, Mexico, Egypt, Argentina, Chile, all these other countries. So they are a bit foreign exposed, but look at this net income they're making. 50 million, close to 40 to 50 million in net income every quarter. So basically the reason the stock is up so much because of how much they beat the expectations. Yo, Fateh, what up, dude? He said SASOL. Hopefully I can find that one for you. Yeah, so here it is. All right, so let's see. This is Sezzle. This is not an American company, I believe, but let's see. Yeah, so look at this. This is the company's from ZAR. Dang, why don't I know what country that is? Well, let me hear so we can find South Africa. Okay, so that's the South African flag. Okay, so yeah, so now we're looking in their revenue in US dollars. So look at that. They sell fuels, chemicals, gas. Half the revenue comes from Africa, then Europe, United States, rest of the world. Let's see the net income though, because this is really what matters. So yeah, look at that. They're making like a couple $100 million net income every quarter. Very profitable company. I bet they have a high yield. Let's see. Not crazy high, actually. Lower than I thought, but they have a 1.84% dividend yield on this company. So yeah, basically this is a South African oil and gas play. Pretty interesting. Hey, what up? I wish I could say your name, but yo, good to see you. All right. What would be a good company for raw minerals? MP Materials is a decent one, but that's like a 2-year out play. One raw material company it's just kind of a royalty stream company, but this is a precious metal gold play. If you want exposure to gold, literally today, I bought ticker symbol RGLD, Royal Gold. It's I'll be really quick about this for the people that are interested. RGLD is a debt-free company, first off. So RGLD, dude, I cannot type today. There we go. So Royal Gold, here's what I love about this one for exposure to gold. They collect a bunch of royalties. Royalty stream interests, that's up 50% year over year. Look at the margins, the net this is why the margins are so high, because of the revenue comes from royalties. They have a 63% net margin. They're making over 100 million in net income a quarter. They have no debt whatsoever. So a debt-free company, 250 million of cash with some gold as well, and just super profitable company. So that's one I kind of bought to get exposure to gold this morning. Why not? Rolls-Royce stock. Hey, yeah, you know what? That's RYCEY. This is another foreign company, ADR, but a lot of people, when they hear Rolls-Royce, they think of like those cars, the high-quality cars. But Rolls-Royce is really an aerospace and defense company. Check this out. Civil aerospace, that's 50% of the revenue. They make like jet engines. And look at that. Defense, 23% of the revenue. Power systems, 22%. So they're very diversified. Only 28% of the revenue comes from the US. Look at how diversified these different countries are. So pretty cool there. And yeah, wow, for the first half of this year so far, they've already made $6 billion of after-tax net income. So really good numbers there. You don't get a yield, but that's okay. What happens? Yeah, hey, Jonathan, I'm on a brokerage right here. If you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, they'll both get 5 free stocks. Yeah, it's my favorite app to analyze stocks, hold stocks. I keep my cash in here. Lowest fee brokerage, doesn't cost anything, it's free. And I have a bunch of different apps as well. Like I use Robinhood, I use Webull as well, but Moomoo is my favorite one. I got this one as well, but yeah, most useful one right here, lowest fee. It's Linktree in bio, first link there. All right, let's see here. Yeah, no, it's not a Weeble. I do have a Weeble account though, but I like this app more than Weeble. All right, let's see here. What about NEM for gold? Yeah, so that's Newmont. This is the one that owns a bunch of gold mines. So, yo, what up, Kayla? No way. Kayla Cash, thanks so much for the little gift there. If you got a stock you want me to look at, let me know. I got you. So, yeah, here's Newmont Gold. A lot of the gold stocks have just been on fire recently just because the literal price of gold. And yeah, look at this. We can see all the mines that they own. Like, look at that there. The Nevada gold mines, 15% of the revenue. These little weird names are the names of the mines. So, anyway, pretty cool. Yeah, look at 2 billion of net income this quarter. So you get gold with the yield as well. So yeah, you get exposure to gold and a 1.5% dividend yield there. You know, the thing with normal gold is you don't really get a yield on it, but with those companies you do. Yeah, hey Hunter, if you want to get this app I'm on, again, it's a brokerage software called Moomoo. It's in the link tree in my bio, the very first link there. Can we get an overview of your portfolio? So yeah, I do have multiple portfolios. Like this one's called my buy and hold account, where basically once I buy a stock in this portfolio, I try not to ever sell it, trying just to hold it on for the long run. Then this portfolio is my risk on account. I buy really risky companies in here. We got some winners and some losers in here. And then finally, we have our Robinhood account. This is my dividend growth portfolio. So every stock in here pays a dividend. Even Google, Meta, McDonald's, great companies. But yeah, this is my favorite app right here, though. Let's see. What's the first step? What up, miss? I'm not sure. What do you mean, yeah? To investing, yeah, you just got to get a brokerage. Then you just buy the S&P 500, I'd personally recommend just buy ticker symbol VOO and just to have this as the backbone of your portfolio. What is VOO? Literally just the S&P 500. Breaks your money up into the top 500 U.S. companies by market cap. So it diversifies you into Nvidia, Microsoft, Apple, Amazon, Meta, Google, Tesla, and then all the companies that are less valuable than them. It's pretty cool. It should return you like 7-8% a year. Show us your risk on account. Yeah, so here's my risk on portfolio. By the way, I share every stock I own. I love being fully transparent. Here's my total lifetime return. I'm only up 16.6%. I feel like no other YouTuber, live streamer, whatever show this. So I love being fully transparent. By the way, best way to support me is subscribe to my YouTube channel. I do stock portfolio updates all the time on there as well. So yeah, I got SoFi, Dave, Robinhood's been crazy. We're up 700% on Robinhood. Yeah. Yeah, and also if you missed anything on the stream, you can replay it on the YouTube stream. So yeah, how much total did you invest? I've invested personally under 50,000. So we're up like over 10,000 all time. But I've been investing for a couple years. What's this app called again? Yeah, so here's my favorite app, by the way, the one I'd recommend the most. This is a brokerage right here where you buy stocks on. It's a software brokerage called Moomoo. So if you want to download it, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you go and deposit $100 to buy stocks, you'll get 5 free stocks, and I will as well. We'll both get 5 free stocks. So hey, it'd help out the channel. So yeah, anyway, I love keeping my cash in here as well. It gives you a nice little, while your cash is idle, like I have $450 of cash, I'm ready to buy the dip, earns you a little daily interest. I made 5 cents today. Sorry, let's get back to the analysis though. So someone said, here's a stock I think might be a dividend trap, and here's how you can tell for yourself if a company has an unsustainable dividend. Yo, thanks so much, Miss 305. I'm gonna give you a follow. I appreciate that. But here's UPS right here. Here's how you can tell if a company has an unsustainable dividend. So first off, they have a 7.4% dividend yield. So that's a crazy high yield. They're promising to give you 7.5% of your money back just in cash every year. Here's how you can tell if it's sustainable. So first off, you look at the net income. This quarter, they made $1.28 billion of net income. Let's round it up. Let's say they made $1.3 billion of net income this quarter. Let's go see how much the dividend cost exactly. You do that in the cash flow statement, and here's how much the dividend cost. The dividend literally cost $1.35 billion in net income a quarter. So literally, they could not afford the dividend this quarter. They couldn't afford it last quarter. So they need to at least make $1.35 billion of net income, and they haven't been. So that's kind of this thing that's unfortunate about UPS. All of their profits are just being eaten up to dividends. So in my opinion, that one has a high chance of a dividend cut. Yeah, hey, Mo, my fault there. Let's look at Lowe's right here. Yo, yeah, here's a Lowe's stock. So yeah, a lot of people spend money, they spend money at Lowe's thinking it's an investment on their house. Like you go buy some plywood or whatever. So this one does trade a little bit with the home builders, but yeah, look at this PE, a really low valuation. Lowe's trades at 20 times net income. Yeah, look at these net income numbers. They're making 1 to 2 billion of net income every quarter. You get a nice 2% dividend. They raise their dividend every year. So yeah, Lowe's is a great, just kind of like buy and hold forever stock, kind of like a Home Depot as well. Home Depot, Lowe's, both just great, never sell stock. So Zach said AEO. What is AEO? Is that American Eagle? Oh, dude, this is that apparel company. So yeah, this company literally just sells like clothes. They just sell a commodity. Nothing really of value here. I mean, American Eagle's literally the same price that it was back in 2004. So that's really unfortunate. Yeah, American Eagle is most of their revenue. Let's see, are they growing? So yeah, the business isn't growing either. So the business lost its growth. It's down 5% year over year. The net income just went really negative for some reason. That wasn't a one-time adjustment. What? So the net income really went negative. Not great. They leveraged up more by 10%. Also not good. So I can see why this one's just not doing good. Again, the upside is like not much for this company. Like it's maybe a double. Like it's just not a great company to buy and hold. Like there's only so much. It's kind of like the Nike thesis. Anyway, here's Google right here. So wow, man, Google stock has been like a sleepy performer. They're up another 1% on the day. Look at them, like perfect trend. I mean, they're nearly at an all-time high again. I think they're just like $3 or $4 off all-time highs. Yeah, $3 off all-time highs. Here's what I love about Google. Here's what I think they can easily get back to an all-time high. They're trading at a PE of a 21. So, or that's the net income multiple. They're trading at a 21 PE, or 22 really, 22 times net income. I think they have the ability to stretch up to like a 25 or more PE before it really tops out. But yeah, look at this. Google's making 26 to 30 billion of net income every quarter. What is Google doing with 28 billion of net income this quarter? They literally spend most of their money solely buying back their own stock. I mean, look at kind of the top here. They're spending 15 billion of net income every quarter, just buying back their own stock. And here's what that does for you as a shareholder. The net income is up 19, but the net income per share is up 22. How is the net income per share up more? It's because the share part of the ratio is down a bunch. So pretty cool. Then they're like an ETF in one. You know, Google owns Android, YouTube, they're in quantum chips, they own Waymo, Google Cloud, cybersecurity, they're huge. Can I open an account with Moomoo? Yeah, it's in the link tree in my bio, the very first link there. Yeah, you can. I would open up a margin account, but never take out margin. That's what I have right here. What's stopping me from using AI to pass? I'm not sure what that means there. Nathan, you actually indirectly helping me start my. Hey, that's great, Tio. I'm so glad to hear that. AMAT, what do you think? Yeah, let's look at AMAT. Oh, wait, Donjar said Amphenol. You know what? I'll talk about Amphenol, then we'll get to AMAT. Amphenol stock has been one of my best performers. This company has had a huge partnership with Nvidia. They're a huge copper play. I mean, Nvidia made this new NVLink spine product that uses 2 miles of copper cables, and Amphenol Group has been supplying that, and that's why, you know, anything Nvidia adjacent has just been on fire recently. But they're just so growthy. Like their communication solutions revenue at a record. Or well, let me just show you this from down here. Look at the FCF, which stands for free cash flow. Free cash flow was a record 1.12 billion of free cash flow. Net income was a record, up double, 1.1 billion in net income. I mean, they're just so growthy. What other S&P 500 companies growing their revenue 56% year over year? So incredible. But let me get to AMAT. So let's see. Applied Materials. So yeah, dang, they're down 14% on the day. Let's go see if we can figure out what happened here. So they beat on revenue, missed on net income. Ooh, so the margins fell on the company. Maybe that's why the stock fell. Maybe they also gave what APLD's poor outlook means. They also might have given a bad guidance, bad outlook, which could explain it as well. But yeah, 2025 Q3. Yeah, so here it is. So look, the revenue grew by 7, but the net income only grew by 4. So that means the net margins, just the slightest bit. I mean, margins fell 3%. One thing I like about this company is the really cheap valuation. This company trades at a 19 PE, get a 1% dividend with this stock right here. But yeah, they're a semiconductor play. Yeah, 74% of the revenue comes in their semiconductor systems revenue. So interesting. Oh, what's up? Yo, thanks again. Have a good Friday. Gotta work. Yeah, hey, Mo, good luck on your work today. Have a great rest of your day, man. See you later. Thanks for coming by. Yeah, hey, Dojish, it's in the link in the description. It's also in the link tree in my bio, the very first link there. Um, let's see. What's your favorite stock ever? Maybe McDonald's or maybe Comfort Systems because of how much money they've made me. FIX right here. This is an HVAC company, heating, ventilation, air conditioning company. And a lot of this company's growth has come from data centers and Bitcoin mining rigs that need proper cooling. All right. Any good stocks for after hours? I don't think anything's reporting today because it's Friday. Normally nothing happens. Nothing usually reports on Friday. Yeah, dude, what are these names? I've never heard of any of these names. So yeah, nothing reports earnings today. Oh well. But yeah, happy Friday, by the way. Hope y'all having a good Friday. Vanna said APLD. Yeah, that's a stock owned by Nvidia. You know what? If we go back to the market closes in 15 minutes. So, but if we go to the Nvidia portfolio right here, one stock they own is APLD. And APLD has just gone into a huge partnership with Coreweave. So check this out. If you're wondering what happened, how they gap up right here and right here, basically it's just a partnership with Coreweave, which Nvidia really helped them do. So Nvidia basically orchestrated a deal between APLD and Coreweave. So they're having a lot of future growth from that. How is Moomoo compared to Webull? Yeah, hey, I have a video on YouTube where I compare all three of these apps. I compare Moomoo to Webull to Robinhood, and the most useful one, lowest fee, most useful features for free would be this app right here, in my opinion, this brokerage right here. But I have a YouTube video that goes over that if you want to check it out. You should definitely, what up, Juju said, you should definitely check out SRPT. Is that the company that unfortunately made some people pass away? So yeah, if you're looking at this stock right here and you're wondering, whoa, how are they gapping down? Why'd they gap down this day on no earnings? Well, basically, some people took their prescription and passed away. So that's sad. I mean, some people lost their life, and that's why the stock has been really struggling recently. I think it was two separate people. So yeah, that's why it's tough to really buy this one. I mean, I don't know. The valuation's really low though, but if the stuff really works, Can you look at the Intel crash? Yeah, basically Intel really has been on a crash. They're up 3% on the day, but look at them on the monthly, or even longer than that. Intel is the exact same stock price that it was back in 1998. So that's unfortunate. Imagine you buy a stock in 1998 and you're down on your position. Well, that's the deal with Intel. But basically, check this out. Look at this kind of what I'm hovering over. Intel stock extends rally on prospect of U.S. taking a stake. So the literal U.S. government might take a stake into Intel. So this is kind of like a value play right now, because if we ignore this news, if that news never happened today of the U.S. government not taking a stake into this company, this is not a buy. I mean, they burn money. They lost $3 billion this quarter, $1 billion last quarter, $16 billion this quarter. The free cash flow is also just as bad. I mean, they're losing a couple billion of free cash flow every quarter. So anyway, it's tough buying Intel, but that's the best news ever, that the government's their best friend now if they're a shareholder. Can you help me start? Yo, I wish I could miss 305. I don't really do that. By the way, watch out for people impersonating me. I don't sell any. I have a YouTube video on how to set it up though, miss. But yeah, by the way, watch out for people impersonating me. I don't sell anything. I have no course, book, Discord, WhatsApp, Telegram. I'll never DM you or follow you. Yeah, just watch out for people impersonating me. The only thing I do have is a YouTube channel. So if you want to help me out, hey, best way to support me is subscribe to the YouTube channel. My YouTube channel is called Nathan Robert. I'm also streaming on there as well. So if you miss anything, you can replay it on the YouTube live. So someone said LVS, Las Vegas Sands. So I think this is a hotel company, resort kind of stock. So unfortunately, they are the same prices they were back in 2013. So that's kind of the struggle of this. Yeah, or dang, even worse. Las Vegas Sands is the same price that it was back in 2006. So again, not a company that'll really outperform the market in the long run. They had to cut their dividend as well. It's just not a great business because of if we go into a recession. But wow, look at this. The Marina Bay Sands, whatever this is up 36% year over year. That's a record revenue. So they just had a record revenue that quarter. The Venetian, that one's down 4%. The Four Seasons, basically a bunch of hotels and stuff like that. Let's see. Look at the net income. This is great news, actually. Wow. They're printing money, 400 to 500 million in net income a quarter. But yeah, I don't know about this as a great investment to buy and hold forever. To be honestly, if I was looking for exposure to Las Vegas, I would check out Vici Properties. Yeah, hey, Tio, I knew it was that. I'm just not allowed to say that word. Hey, thanks, Edzilla. I appreciate you. If I wanted exposure to Las Vegas properties, I would check out Vici Properties. This is actually a real estate investment trust. They own the land. They do triple net leases for a ton of properties in Las Vegas. So many MGM resorts, Caesar's Palace. What's that Black Pyramid called? Again, the Luxor, I think. They own so many. They own the land under all of them, and they have a sustainable 5.3% dividend yield. Look at this. If you're looking for a higher yielding name, this one gets you a 5.3% yield, 66% payout ratio. So yeah, actually, I have multiple YouTube videos where I go over the stock right here. They own so many cool properties in Vegas, and they're triple net lease. So I like them. Anyway, Vegas tourism is dead right now. Dang, Shan. Anyone on the Strip been there recently? I was there in April. Loan said LRCX. That's Lamb Research. I love this company, actually. Dang, they're down 7% on the day. Probably because they were pretty much at an all-time high the day before. I liked them for the yield as well. Checked it out. You get a near 1% dividend yield with Lamb Research, which is pretty cool. The PE is a 24, so they're trading at a 24 PE, which is price and net income. I feel like they have the ability to go higher. They beat on revenue, beat on net income, beat on EBITDA, but the stock still fell anyway, so maybe it was bad guidance. Wow, look at this growth. So revenue's up 33, net income's up 68. So that means they're growing their net margins, a record 33% net margin. That's actually incredible. Record margin quarter. So I wonder why the stock is struggling. Maybe bad guidance. I don't know. They're a great one. AJE said, look at PRLB. What is PRLB stock? Proto Labs. Huh. Let's check this one out. Dang, the stock hasn't done too great. They're only a $1.1 billion company, so they're a very small market cap. So computer numerical control. This business is up 21% year over year. Nice. Injection molding, down 3. 3D printing, down 1. So let's see. They are making that income. That's actually shocking. So yeah, that's a lot of revenue. 135 mil revenue, up 7. And they made 5 mil in net income, so very, very low margin business. But they are at least making net income. They have no debt as well, debt-free balance sheet, lots of cash. How much cash they got? 100 mil of cash left. I want to see more growth for this company, to be honest with you. It's not terrible. Like, they're not going bankrupt anytime soon. They got no debt, bunch of cash, making net income. But QBTS, yo, Adrian, what up, man? He said qubits. What apps do you use? Yeah, hey, all the apps I'm using are in the link tree in my bio. This one I'm on right here is my favorite one. Lowest fee, best free tools and stuff. It's a brokerage called Moomoo. It's in the link tree in my bio, very first link there. This app I'm on right here to do analysis. So yeah, here's a quantum stock, D-Wave Quantum, one of the main quantum momentum companies. So whenever quantum stocks are doing good, usually this one is doing great. They're down 6% on the day. I wonder what happened, but yeah, they don't have too much revenue either. Like the revenue was 3 mil this quarter, 15 mil last quarter, which is decent, but they've been able to dilute the life out of the shareholder and raise a bunch of cash. So like, look at this. How did they get their cash from 300 mil to 820 mil? Well, basically they issued so many shares, which is genius of them, just like GameStop does. They're like, oh, this is a pretty nutty valuation. Let's issue shares. So that's great news. 800 mil of their market cap is just cash. Anthony said CAG. Is that Congra Brands? Let me check this one. So yeah, Congra Brands. They have been struggling hard. Like, look at their stock price. They've been on a nasty little downtrend here. Let's see if we can figure out why. So they're in grocery and snacks, refrigerated and frozen. So this might be why they kind of are just not growing. They're actually declining. I mean, the lifeblood of the business, the sales are down 4.3% year over year. They are still making net income every quarter, though, but the trend isn't getting better. It's declining with the sales, which is expected. But at least they're still making like 200 to 300 mil of net income a quarter. But It's tough. It's tough. Are you on the open door train? I am not. Open door is begging for lower interest rates. Trump just announced Alaska that Nathan Roberts are new. Hey, I didn't hear that news, Teddy. Let's see. Can you check out Suncor? It's Canadian oil. Let's see. So Suncor entered. Wait, Suncor. Yeah. So these oil stocks don't outperform in the long run. Like, look at this Suncor. If we zoom out on them on the monthly, I mean, look at that. They're the same price as they were when they IPO'd nearly. But you do normally get high yields with these stocks. Like, yeah, check that out. 4.3% dividend yield on this company. 11 PE. Well, first off, let's convert the currency to US dollars just to observe it easier. So yeah, look at that. They're making close to $1 billion in net income a quarter. 800 mil to $1 billion a quarter. GTA 6 before Nathan invests in crypto. Hey, I do got some crypto proxies. Like I got Robinhood, some SoFi, but yeah, right now I actually do not own any crypto. So yeah. Hey, here's Lasan said Pan W. I love Palo Alto Networks. That's a stock owned by Nancy Pelosi as well. These super investors got to make all their trades public by SEC law. And one stock she just bought a bunch of was Palo Alto Networks, a huge cybersecurity company, I think the biggest one out there. And here's what I love about this stock. I love subscription model companies. Check this out. 55% of the revenue comes from their subscription model, and it literally just hits a new record every quarter, every year. So that's the kind of trend you want to see for a company if you're just going to buy and hold them forever. My dad works for Palo Alto. Yo, Tio, that's awesome. Yo, hopefully he gets some stock-based comp. It's a great company, really. I mean, they're printing free cash flow. I mean, 500 mil plus a free cash flow a quarter, couple hundred mil in net income as well. So yeah, Palo Alto is pretty cool. The market closes in 5 minutes. Let me see how the market's doing real quick. So yeah, here's our portfolio. We're down 0.6% in here, down 1.1 in here. So both of these portfolios are down bad. The SPY is down 0.2, so we're doing quite a bit worse than the S&P. Yeah, this one's down 0.67. And then our Webull account, hey, this one's actually green. We're up 0.44% on the day, and this one, not too bad. Yeah, T-Mobile's having a good day. Nice. The Palo Alto acquisition of CyberArk is not seen as good. Yeah, it might be dilutive to EPS. Like some companies acquire a stock and it's accretive to the EPS. That one might actually hurt the EPS temporarily. But let's see. Someone said, we just looked at that one. Yo, Not Fates, what's up, dude? He said, thinking about buying UNH with all the good news. Well, United Health, it's tough buying this stock after the 12% rally. But if you're wondering why the stock is up so much today, basically Warren Buffett bought a huge stake in this company. And, Warren Buffett doesn't buy stuff unless he does a lot of research. So United Healthcare, 2.8% dividend yield. The PE is still 13, a dog cheap PE that's pricing in for the net income to fall another 20 to 30%, which, it actually is. Yikes. Whoa, $1.70 of net income. They actually won't be able to afford the dividend those quarters. So oh, wow. So analysts are expecting that. Anyway, yeah, Warren Buffett bought the dip on. Amazon went green barely. Let's see. Amazon is red right now. Or up it was up 0.02. It's down 0.08. So yeah, super close to green. Let's hope it can go green by the end of the day. Yo, happy Friday. Market closes in 4 minutes. So yeah. I think Buffett sold T-Mobile. I didn't even know he owned T-Mobile. But that stock is up 2% on the day. So that's weird. So my holding is very low. Zscaler. Yeah, hey, Zscaler is another great company. Yo, Cochito said HESM. This is actually a midstream company where they there's ticker symbol HES, and then there's HESM, the midstream company. They own like the pipelines, the natural gas pipelines, and they just collect a bunch of fees. And so you get a huge yield, and it's actually sustainable. They have a 6.7% dividend yield, and let's see the net income. Yeah, wow. They're making like $180 million in net income a quarter. So yeah, let's see how much the dividend costs. You know what? Let's do the exact math. So They made 180 million of net income this quarter. Let's see how much the dividend cost. The dividend cost 82 million, so they can't afford the dividend. And they bought back 200 million of the stock this quarter. Not too shabby. So yeah, that's a higher yielding play. Yo, September, we just looked at DLO. Yeah, I don't really want to go over that one again. DNN, please. Yeah, this is Dentshit Mines. This is a gold company. So this stock basically just kind of trades with whatever the commodity of gold is doing. So they are Canadian. You know what? We'll switch their currency to USD. So yeah, look at that. Mining is all their revenue right here. So yeah, they did just make net income in the most recent quarter, which is good. The revenue isn't much though. Huh. Revenue's under $1 million a quarter. They have a good balance sheet though, really good balance sheet. But anyway, out of all the gold stocks, that one might not be a gold stock, by the way. They actually might be in a different commodity. But I actually bought 2 shares of RGLD today, Royal Gold. It's a gold royalty company. Let me see. Is this company in the uranium? So, DNN is a uranium company. My fault. So yeah, forget I ever said gold. DNN is a uranium company. So if we go to ticker symbol URA, the uranium ETF looks pretty similar to how DNN looks as a stock. Yeah, let's go back to DNN. The two stock prices look very similar. So yeah. What are you on? I see TradingView. I'm actually not on TradingView. I'm actually on a brokerage, Sean, called Moomoo. If you want to get this little brokerage I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So yeah, if you want to get this app and you go and deposit $100, so both get 5 free stocks if you sign up with my link up there. But you can just type it into Google. It's a brokerage called Moomoo. Yeah, no problem. Buffett bought at 285. Yeah, he got a good 3% plus yield there, which is pretty cool. What do you think of Snowflake stock? So yeah, Snowflake, this is like Palantir's biggest competitor. By the way, market closes in less than a minute. So yeah, we'll go see how the market closes after this. There's good news and bad news about Snowflake. Here's the good news is that the revenue is so growthy. I mean, the revenue just hits a new record every single quarter, every single year. And the bad news about this company is the losses. I mean, they're burning through net income. They lost 400 mil this quarter, 300 mil last quarter, 300 mil last quarter, and the trend isn't getting better. They're losing more and more net income. So we would kind of like to see this trend start to reverse and them start to go net income positive. But yeah, I like them for the growth, but I don't like them for those losses. It's the stock-based comp that's eating them up. 180, I don't know what that is, D. If you got a ticker symbol, I could check it out. Should I buy DNN? I don't know. If I was looking for URA for uranium exposure, I'd probably just buy URA, the ETF, or just I would buy CCO, Cameco. Cameco is the most incredible uranium play out there. If you want like the best exposure to uranium, it'd be this stock right here, CCO, or you can just get exposure to it via URA. I'm thinking of buying Duolingo. Ooh, let's check out Duolingo. Buffett got in around 310. Yeah, so Buffett did buy some United Healthcare. That's why the stock's up so much today. And he has like warrants on the company. But look at Duolingo right here. They reported earnings. The stock rallied up, and then they tanked. Yeah, September. We'll look at ADVL after this. Remind me to look at that one. We'll look at it after this. So here's Duolingo right here. I love this company for the subscription model. I love subscription model companies, and look at the subscription growth. Subscription revenue is literally at a new record. It's up 50% year over year to a new record. And not just record, subscription revenue, but record free cash flow. Free cash flow is up 60%. Net income's up 83%. Revenue's up 40%. So that means they're growing their net margins as well. Everything about Duolingo is headed in the right direction, but I know there's some uncertainty around like ChatGPT, OpenAI made like a Duolingo competitor. So there might be some like increased competition, but for right now, fundamentals are incredible. Someone said T-Mobile dropped. Hopefully not. Let me check that. T-Mobile's up on the day. Check that out. That's like a great day for T-Mobile, right? They're up 1.7. I'm not sure what that means. All right, but anyway, let's keep going here. Let's look at AVDL. Let's do it. AVDL. It's a hidden gem. It's so underrated. Let's see. Oh, I had this one on my watch list, actually. Let's check it out. So there must have been something I liked. I don't remember this one, but they are on my watch list. Let's see here. So sales of Lumriz, whatever this is. Yeah, look at the growth, dude. That's what you love to see. The revenue's at a new record, up 65% year over year. So the revenue's growing very strong. They just, according to the analyst expectations, the orange line is what the analysts were expecting. They beat on revenue, they beat on net income, and they beat on EBIT by a huge chunk. So yeah, everything about this company's headed in the right direction. They actually made net income, 10 million net income this quarter, deleveraging the balance sheet. So that one's looking great. They do look like a hidden gem. Yo, Pierce, what's up, dude? Nice. Can we do it Roblox? Yeah, we'll look at Roblox. You know what? So Roblox, the thing is with them, so let's see here. If we go to the Cathie Wood portfolio, her second largest holding is actually Roblox, and they're down 6.3% on the day. Basically, there's some news of Louisiana. If you Roblox gets punished as outrage rises against the platform for enabling abuse. So something like that. They're in some lawsuits, some heat right now, but I don't love this company anyway. Here's the good news. Here's the one part I do like. Here's a cool stat we get: the daily active users. In the most recent quarter, they had 111 million daily active users, when the same time last year, they only had 80 million. But the bad news is as well, they lose a bunch of net income, 200 to 300 million net income a quarter, and they have the same amount of assets or liabilities as assets. So what's the app? Yeah, hey, Urio. This is a brokerage right here where you buy stocks and stuff. So if you want to get this little brokerage I'm on, it's in the link tree in my bio, the very first link there. It's a software. It's a brokerage called Moomoo. But yeah, it's an affiliate link too. So if you go and sign up and deposit $100, we'll both get 5 free stocks. Or you can just go into Google, type in Moomoo. It's a brokerage. Anyway, so yeah, that's the thing with Roblox. Yeah, what up, Pierce? He said ALKT. What's this one? ALKT. So Alchemy Technology. So a $2.4 billion company. They just gapped down on earnings. So let's go see what the earnings are if we can figure out what happened here. So they beat on revenue, beat on net income, and they beat on EBIT. So they triple beat. Revenue's up 36. They're losing net income every quarter, which isn't the end of the world. They acquired a company last quarter. So yeah, you see this huge cash from investing activity. They invested $390 million. They bought some business, and that's why the balance sheet just changed a bunch. I wonder what they acquired. Interesting. So yeah, it looks like it's a software as a service business. Maybe the acquisition is why they fell. I don't know. Let's see here. Derek said, any chance you can do AMD? Yes, sir, man. I actually do own AMD. You know what? Here, I'll show you this. I might be biased on AMD, but I own them for a reason. Let me show you this right here. So I think it's my largest holding. Yeah, so we have 11 shares of AMD. This one's just been on a monster rally recently. Like, we didn't even time the bottom. The bottom was $76, like $80. We bought them at $125 a share, and we're still up 40%. So AMD has just been a very nice performer. Here's what I love about them. Huge GPU market share, obviously. They have a 17% PC GPU market share. But one huge growth driver for them has actually been the data center business. Check this out. The data center revenue is up 15% year over year to a new record. These data centers need GPUs. And since AMD makes GPUs themselves, they can give themselves the newest models, the quickest, and at the cheapest price because they're AMD. So it's genius for them to get into the data center business. Look at that free cash flow. Free cash flow is up 300% to $1.7 billion, $900 million net income this quarter. Absolute fortress of a balance sheet on AMD. So for all those reasons, I do own them. I might be biased, but I love them. I have about $250. What should I buy in the long term? Yeah, hey, just great companies like Google, Meta, S&P 500, McDonald's, companies you use and trust, Amazon. Thinking about adding more Google? Yeah, I love Google. What app is that? Yeah, hey, Pablo. Again, this is a brokerage right here. So if you want to get this little software I'm on, where you buy stocks and stuff, it's my favorite one, lowest fee brokerage, best tools. It's in the link tree in my bio, very first link there, Pablo. It's also an affiliate link, so if you want to deposit $100, we'll both get 5 free stocks. Do I sell my Nvidia to buy something like VOO? Hey, the largest hold. Yeah, so here's the number one thing I recommend. Again, not financial advice, that you should buy, as like the backbone of your portfolio, is just the S&P 500. A lot of investors can't even keep up with that S&P 500, and its largest holdings are market cap weighted. So Nvidia, Microsoft, Apple, Amazon, Meta. So yeah, Please tell me BB. Yeah, we're not. I don't really look at BBAI. This is like a meme stock. No fundamentals here really. They burn through money hand over fist. I just not a great stock you really want to own. It's just momentum right now. These net income losses are not great. Like, look, they lost 200 mil this quarter. Like, they lost 230 million this quarter. The whole company is worth 2.3 billion. So they lost exactly 10% of their entire market cap in net income this quarter. And they missed on revenue. I mean, it was a bad quarter. I mean, analysts were expecting 40 mil of revenue. They only made 32 mil of revenue. Did the revenue decline? Okay, revenue's down 20% year over year. They lost their growth. They're burning through a ridiculous amount of net income. I just can't buy that stock, in my opinion. It's just all momentum. Yeah, so I honestly, the thing with Intel and the government thing, I don't, it's not making me want to buy Intel. I mean, yeah. Well, it's great news for Intel, but yeah, I'm still not buying Intel. What's a good penny stock? I don't know. What's a good penny stock that has huge returns? I wish I knew the answer for that, because if I did, I'd be all in, my brother. But for a penny stock that's kind of risky, here's a couple ones I just bought. This is TSSI, DCTH, and GHM are all companies under a $500 million market cap. Dang, this stock just tanked on toward the end of the day. You still got to be careful with these really small caps, though, just because they're so risky and so volatile. So yeah. Can you look at Workday? Yo, is that $15 million company? I don't know. Pierce, what's the ticker symbol for that one? I don't think so. Hey, what up, Kevin? Kevin Van, what's up, dude? So, let's see. Can you check the VEU index? I don't know what that is. The Vanguard? Oh, this is just the all world. So basically, this is an international ETF. It doesn't only just own U.S. companies, or no, it only owns non-U.S. companies. So notice Taiwan Semi, Tencent, ASML, SAP, Alibaba, Nestle, Novo Nordisk, all non-US companies is what this ETF owns. So yeah, pretty interesting. It's like if you want exposure outside America. WDAY, let's see, WDAY, oh, Workday. Oh yeah, so let's see here. So a $60 billion company. Are they going through some merger, or was that a different company? Well, let's see here. I think that was Workhorse. So let's see. Yeah, subscription service. Let's see how the subscription service is doing. Yeah, look at that. The subscription just hits a new record every quarter. I mean, this is kind of like a mini Salesforce almost. Yeah, they're making net income every quarter. So they're a profitable company making net income every quarter. Great news. Revenue's up 12. I think investors wanted a little bit more growth with them. But yeah, not too bad. This is a big software play. Yeah, let's see. Edzella, please check FLYE. Yeah, we'll look at a few more here. Then I gotta go. FLYE. Yeah, This is a very small company. $18 million market cap. We don't really cover these kind of stocks on the channel. Yeah, dang, look at that. They're down 87% just today. So yeah, we're not really even gonna cover this $18 million market cap. I don't think that's worth giving attention to. Let's see here. So APLD, yeah, that's a company owned by Nvidia. You know what? If we go back to the Nvidia portfolio right here, here's the thing. Nvidia owns Coreweave and APLD, and APLD and Coreweave just went to a huge partnership. That's why APLD has been doing so good recently, because of the partnership with Coreweave. So that was kind of what they were talking about on earnings there, which is pretty cool. And again, just because Nvidia owns something doesn't mean you should, but that one's decent. They are still a money loser, but what is this one? GPRE. So Green Plains. Yeah, very small one as well. A $500 million company. Dang, look at them on the monthly. So this stock is the same price that it was back in 2008. So dang, yeah. Ethanol. Why is that spelled weird? Like, not ethanol, like ethanol? Or is that how you spell normal ethanol? That looks like weird. Anyway, it looks like they sell some chemicals, commodity. Yeah, so bad news. They're losing net income like every quarter, 70 mil. Revenue's down by 10 after being down 30. So we kind of want to see the growth come back and see them make some profits again. Yeah, that one's tough. what's in the Trump portfolio? Let's see. I think it's DJT. Yeah, DJT obviously largest holding. Then he owns some Apple, Amazon, Nvidia, Berkshire Hathaway, and Tesla. Yeah, there's the Trump portfolio. Yeah, these are all super investors. They have to make all their holdings public by SEC law, like Nancy Pelosi, you know, the genius trader, definitely no insider knowledge. They have to make all their holdings public by SEC law. You can also kind of like batch trade, follow them and stuff, which is kind of cool. But anyway, yeah, there's the portfolio right there. You talked about track one time, and I'm looking. Wait, TRAK. Wait, you talked about track one time. Let's see. What is TRAK? I don't know if I remember this. Oh, Raposi track. I have this one on my watch list actually. You know what? I must have liked this stock if I added it to the watch list. So again, there must have been something I liked. They're only a $300 million company. So again, only $300 million company, and they're a business making $2 million of net income every quarter. Not bad. And they have no debt. They have a really good balance sheet. So hey, I can see why I liked this one in the past, No bankruptcy risk there, not for right now, no debt. What app are you looking on? Yeah, hey, Jeremy, this is actually a brokerage right here, a software. You want to get this little brokerage I'm on? It's in the link tree in my bio, very first link there. It's an affiliate link too, so if you sign up for this app with my link and deposit $100, we'll both get 5 free stock actually. It's my favorite. I have multiple brokerages here, like Webull too, but that one is my favorite, lowest fee, most useful feature brokerage right here. So it's my favorite one. All right, let's see. That looked like a meme coin chart. What up, Levin? So someone said C3AI. They have one of the best ticker symbols. It's ticker symbol AI is their ticker symbol. And yikes, so this stock has been struggling bad. So let's see if we can figure out why. So they have a subscription business, which is cool. So that's actually good news. The subscription revenue is up 17% year over year. But I think it's these net income losses. So yeah, look, the revenue's up 25, but they're losing like 80 million of net income every quarter. And look at that. The assets are falling every quarter, but at least they have no debt. Not bad. Is WDAY overvalued with a 106 PE? So there's so many metrics you have to look at to tell if a company is overvalued. Again, the PE ratio is just the net income multiple. And hopefully this loads here. My Wi-Fi is kind of bad right now. Let's see. So yeah, they have 125 PE. Let's see. So again, that's just the net income multiple. Oh, okay. So look at this. They've had some one-time adjustments. So the PE ratio is way, 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 way lower. So check this out. If we look at the net income was only 68 million. The operating profit was actually 200 mil. So they actually made a record, like close to, dang. So the net income multiple is actually probably half of what it is. It's still pretty expensive, like a 60 PE, but they're high growth. Is HIMS actually under investigation? I don't know if they are. You've been asked probably, but looking, yeah, we'll close the stream off looking at UNH. Oh, wait, actually, Austin said FLNC. Let me look at FLNC, then we'll look at UNH. So this is Fluence Energy. Looks like they IPO'd not that long ago. Uh-oh. Well, hey, you know what? Good news. I was about to end the stream anyway, and TikTok just took down the stream. So, hey, if you guys... I appreciate all of y'all here on the YouTube replay. Whoa, Simmons is the largest shareholder. I wonder if that's the electricity company Simmons that owns this one. Anyway, the guy who requested this stock isn't even seeing me cover this company. So, that's unfortunate. Anyway, I do appreciate y'all being here. Make sure to hit the like button on the YouTube stream. I'd really appreciate that. And if you want to hit the subscribe button, we stream every single day. So I'll kind of close it out, giving you a quick portfolio update. I'll show you every stock that I own, how much I'm up and down on all of them. So yeah, we fell 0.8% in our main account today. Most of these stocks are red. Everything except Meta and Google was red on the day. Our Roth IRA, here it is. Only stock we bought today was RGLD, Royal Gold. With the market at all-time high, why not check a little bit out of gold? Then we have our Moomoo account buy and hold portfolio. We're down 0.9% on the day. Not terrible. Oopsie, sorry. Jeez. So yeah, down 0.86% on the day in there. And then finally, we have our Weeble portfolio. Hey, Luffy, what's up, man? So yeah, we're actually up in this portfolio. Surprisingly, we're up 0.5%. So you know what? Yeah, very last thing we'll look at is AMAT, Applied Materials. I think I was reading the articles. I think it was just the guidance that hurt this company. Like if I kind of read this right here, what APLD's or AMAT's poor outlook means for the chip stocks. So I think the thing that really sent the stock down was their guidance. Because if you look right here, they beat on revenue. They missed on net income, but they beat on EBIT. And I do notice next quarter the EBIT's supposed to like tank. I wonder why. But anyway, the valuation's really low, a 19 PE, a 1% yield, 16% payout ratio. That's what I like to see. 1% yield, only a 16% payout ratio. Like they could literally double their dividend right now if they wanted to. They just choose not to. So anyway, what was the revenue? Did it grow? Yeah, so revenue's up 7. I mean, single digits again. I would like to see a little higher growth, but that is good. Actually, 7 is better than what it has been. But anyway, 7% revenue growth. Anyway, that was stream. Luffy, or everyone, don't forget to drop a like before you go. It really helped me out. Make sure if you're new, hit the subscribe button. If you want, turn on notifications. You can find them when we stream next. And yeah, I hope you guys have a great rest of your day. My name's Nathan Roberts. See you guys in the next one. And if you want to get this app as well, little brokerage I'm on, it's in the link tree in my description.